Jannie,
Hey, Richard, Igor. Nice to see you
Hello,
guys.
hello.
how's it going?
Very well,
I'm
thanks.
glad
And
to see
you?
you guys.
Not too bad, not too bad. Happy Tuesday.
I think there's a bit of a replay there in the background.
Who on my side?
Is
Do you
everything okay?
guys also pick up that delay? Is there like I can hear myself like a few seconds later?
A slight delay.
Okay.
Slight delay, yes.
I had to log in and out a few times before it actually worked, but seems like we're going now.
Okay. All right. So if you guys don't mind, I'll just share my screen
Yeah, go for it.
and then
Yes,
we can
please.
get
Yes, please.
going. Okay. So I'm obviously looking at the NASDAQ. Let's just wait for the screen to load. Okay, you can see my screen, right?
Yep.
So yesterday, Richard, I don't know, you also look at the NASDAQ, right? So yesterday we had this gap to the upside.
Yeah.
And today it looks like a continuation. We are currently trading just above yesterday's high. So
Right.
it will be interesting to see what the opening looks like. I typically don't trade the first 15 minutes, so we'll see what that looks like. If it continues to the upside, I think we can at least expect this R1 level that you can clearly see on the 1 hour time frame. But for now, I'm definitely bullish. If you look at the longer time frames, on the daily, we've actually reclaimed, well, not quite reclaimed it, but we're back to the 200 EMA. So it's going to be very interesting to see how it behaves here. I'm not necessarily bullish just because it's above the 200 again. Typically, when it's around the 200 EMA, what you can expect is some ranging activity before it starts to find direction. So we'll see how that plays out. But definitely, so far today, we are bullish. We are trading above the open. And yeah, hopefully I can get a couple of opportunities today.
Also,
But
Jannie,
yeah,
if you look there, sorry for interrupting. If I think it's on the NASDAQ, if you look at the 7th of this month, smaller time frame, around about, and I'm looking here at the CFDs, obviously, around about 20,257. There's a sort of a lower high after looks like some crazy expanding triangle pattern. That price is
okay, this is now
very
the
near.
previous. I'm going to have to look at my, because I'm looking at the June contract now. So the volume is
Yeah,
obviously
you on the future side. Gotcha.
yeah.
So it might not be the
So
same on as the CFDs then.
no, it will look different because there's a difference in volume.
For sure.
So yeah, the volume just recently on Friday it moved over to the June contract. So it will not look exactly the same, but maybe you can just share your screen and just explain.
No, I mean, you go ahead. It's just it will be a bit different on the CFD side. It's just that on the SPX, it just breached that same level around about the same time, which was a lower high. As you know, probably like I want those levels to be breached and then see sort of a reversal. I was just making a comment there because price has reached that EMA of yours and it's sort of in line with that level as well, going back a little bit in time. But anyway, just made a side note there.
Yeah, so I mean, on the Nasdaq, I scalp the Nasdaq, so I don't really look at anything beyond the 1 hour time frame. And for those of you who don't know, I look at these 4 time frames. This is the 1 minute time frame, so this is where I make my actual decision on. But I do get my bias from the 15 minute, the half an hour, and the 1 hour time frame. And I typically want to see some confluence here, at least 2 out of the 3 time frames, and then that will give you my bias. And then on the 1 minute time frame, I will time my entry, and it will be support, resistance, very basic things: support, resistance, and VWAP.
Gotcha.
Mainly. So yeah, we'll see. But I always wait for the open because you can look at pre-market action, and it looks like it's definitely going in one direction, and then the market opens and it does completely something else. So we'll definitely wait for the market
Richard,
open.
I have a question, one question, and that question actually is from yesterday. So during our session, we got a couple of questions about S&P and NASDAQ. So Paul, me, and Michael, we do not trade a lot of indices. So we try to make some explanation on that comment. But the question was about the gap, about that gap. Should we short that gap when we see on NASDAQ? Because a lot of traders think that they should, the market will fill the gap and they should short. So our scenarios was related to wait for the pullback, maybe to buy, but not short to fill the gap. So I just want to hear just about your opinion about gaps and NASDAQ S&P 500.
I don't care about gaps. Like if it gaps, it gaps. Like you don't know if it's going to continue or whether it's going to pull back. That's why you need confluence on multiple time frames.
Yeah.
If you look at longer time frames, it will give you a very good indication of what you can expect in at least in the short term. So I'm not saying that it can't pull back, but if it does pull back and break the open, it will be evident on multiple time frames. So you need to look at multiple time frames, and that's really, really crucial. Now, yesterday, like if you just look at the price action, just keep it very, very simple. What I've got on here is the pivot points. So pivot points is a very standard indicator, and it's just calculated based on the previous day's open, high, low, and close. That's how they calculate the pivot points. So you get the resistance 1, 2, and it goes up to 3. The same with the support levels. But if you look at the price action here, obviously this is pre-market. You're hitting against the R2, the pivot point. It retraces. Do you trade this? No, this is all pre-market. This is all pre-market. It breaks through R2. Again, this is still pre-market, and this is the open right here. That's the open, okay? You don't trade the first 15 minutes, but I did take 2 trades yesterday, and I did record them, and I played them out, or I played them in yesterday's session. I got 2 trades to the upside. Now, why would my bias be long? Because we broke through the R2 level. We came to retest it. And then we pushed up. But I look at multiple time frames. So I want to see at least a bullish candle on either the half an hour or the 1 hour. But at least 2 of the 3 time frames need to agree. And then you need to be able to tell a story. Does that make sense? Like I just did, yeah. It broke through R2. It came back to retest it. And then it continued. And then you combine that with the bias that you get from your longer time frames. What does the other time frames look like? I wonder if I can, if you don't mind, because we're not going to look at the markets until 15 minutes after. But I can quickly show you the recording, if you don't mind. And I won't take up too much time. But the question, to answer the question about gaps, like will it close the gap? I mean, you need to, the price action will tell you whether it's going to come down. And then you just, but just the gap itself means nothing to me.
No,
like
those gaps can stay on there for ages and ages and ages before they get filled. Eventually,
yeah, exactly.
You need to at least have some reason, as you said, to be shorting. Then maybe it will be filled. Maybe 10 days after that, and market could be moving lower. So it's definitely not a reason for shorting.
Yes.
So let me just make sure this is the right video. I want to pull up any. I'm joking. Okay. All right. Let me just move this over because it's on the wrong screen. Hang on, guys. Okay. So let me just start this over. Okay. So yeah, let me just pause. Okay. Let me just point out what I'm seeing there. See, that's the bullish rejection of R2. I'm getting all 3 time frames. Giving me the last close candle on all 3 time frames, the bullish, all of them. Okay, and then you combine it with the fact that it bounced off the R2 level after a retest. So my bias is bullish. Okay, the gap plays 0 role in this trade. I look at what's happening right now. Okay, so I've got my bias now. You can just stop me if you have any questions, and I'll just, if I'm skipping over something or talking too fast or something like that. But so my bias comes from the long time and longer time frames, and now I'm looking at the 1 minute time frame to find my entry. Okay, so what would I mean by that? Well, okay, I'm looking for an opportunity. For example, you get a breakout. This is a support level, okay? Because the last resistance level, if it breaks out, that becomes support. So now we're at a support level. Yeah, I'm starting to get interested. Do I just enter the trade there? No, okay? This is just the level of interest.
Yeah.
And just below that, you have the one standard deviation from VWAP, okay, which is also a support level. So this is your levels of interest. You got your bias. You got your bias from the longer time frames, and this is your level of interest. Now, from this point, you want to see price action playing ball, okay? And so what that would typically look like is it's either going to form a bullish candle on the support level or on this VWAP. That's the one thing. And then the second, what you want to do from there is, like, if you do get the bullish candle, the next candle needs to break the previous candle that just closed. It needs to break that high. Okay, that's your final confirmation that it's going to continue. Okay, will it always work? Of course not. Okay, but you need to have some sort of plan. You need to have some sort of plan of how you're going to trade it. So if I just play this again, okay, there I'm just pointing out that this is the level of interest. Let me just forward that a bit. Okay, so now it's breaking through a little bit, pushing back. So this can be very easily, it can confuse you and trick you into, like, especially that bullish candle. You may enter there. It's not the right time. You have to wait for the candle to close. That's the first thing. Or if the candle completely engulfs the previous candle, like the entire range of the candle, then that would be another reason to enter the trade. So it's just those two. Okay, so you can see it's coming down to the one standard deviation now. So I'm just sitting here waiting. I don't know if it's going to go there. I know I'm at the level of interest. Now it's just all about price action. So
and patience.
Yes. So now I'm just sitting here waiting, and you'll see me when I enter the trade. Yeah. Okay. So yeah, you just sit patiently and wait, because it can just fail, right? But you've got your bias, as I said. And if you look at the longer time frames, it looks like it's going to completely fail. So don't pay attention to the new candle that's still busy forming. Pay attention to the last closed candle. Now, okay, so what am I looking for here? I'm either waiting for a bullish candle to close or this current candle to completely engulf the last bearish candle. Okay, those are the two entry criteria. That it needs to do one or the other. Okay, if it doesn't do that, then I don't take the trade. It's as simple as that. Okay, there I'm just pointing out that if it engulfs there, I'll take the trade. But you can see how beautiful it just bounced off the one standard deviation. Okay, and there I enter the trade. Okay, and my take profit, you'll see I'll move it to not quite at the previous high. I like to take it slightly lower than the previous high. It's just to increase the probability a little bit, okay? Because it can, like, sometimes, like, if you target the previous high, it can just miss it, like, by a little bit and then come down. So if you just
it does it quite a bit, actually.
Yeah. So if you just reduce your I nearly said income, not income. That's not the word. No. If you just reduce your take profit a little bit, just below the previous high, you increase the probability for you to actually get that trade. Okay. So. And this is only 2 micros, by the way. It's very, very small. It's like 2/10 of a contract. So let me just forward this a little bit. Now, during this trade, you're going to get, like, all sorts of, like, moments of, oh, this is not going to work. You need to trust the process. Yeah. Do the same thing every single time and measure your success over a series of trades. Okay, and I'll just forward that. You can see, I'll show you the scary candle. There was one. It came down to scare the kids. That's the one. Okay, but then it pushed back up. I'll just forward that a little bit. Okay, it's getting close. Okay, so it's going to close now. Okay, so does the trade make sense?
Yes, absolutely.
Yeah. Yes.
The gap plays no role. Okay, now there was another opportunity. I'll show you it now. It was in the same session. There we go. Okay, so let me just pause the video. This was the trade I took. Right, that's the trade. It did break the high. It moved slightly higher, whatever. Okay, I got my profit on that trade. Now this is presenting a second opportunity. It's coming again to the support level. And what's your bias? Look at the last closed candle, right? It's bullish. That's also bullish. That's also bullish. So you get the 3, and now I just want to get my the entry on the 4th time frame. That will mean all 4 lines up. So we had the support level here. The market is opened, but it's okay. So exactly the same thing. I'm going to wait for a bullish candle, and then the next candle needs to break the high of the bullish closed candle. That's the first one. Or if it completely engulfs that candle, that's the two entry criteria. So now I can't see how much time is left in this particular candle. Okay, but it's exactly the same thing. Okay, there it comes back lower. Always, very important to wait for the candle to close, unless again it engulfs the candle, because that would be strong enough or a good enough reason to enter. So let me just, it's going to close any second. Come on. Okay, see, okay, I'm getting ready, so that means the candle's about to close. And then just wait for the next one. So I'm just waiting. You see that just a little, okay, I'm just moving my stop loss to below, and then the take profit at the previous high.
Mm-hmm.
Okay. And then we can just look, I'll just forward this on. Okay. Forward a bit more. And then, well. All right. Well, the video ended just before I took profit there, but it did take profit. Okay. So does that make sense?
Yes,
Yep.
yes.
So it's a long way to answer the question about the gaps, but I don't care what the gaps are, whether it's been gapping or not. It's all about what's happening right now. And if it's going to come down, you will see it. And like if all the time frames agree with a certain direction, then you've got your bias, and then you can go short. But I'm a scalper, so I don't try to catch big moves. I just try to catch something bigger than my risk. So, okay, so now we are back below yesterday's high, but we're only 3 minutes in. So we'll see what happens at the end of this first candle, and we'll see if there are any opportunities. All right, so that is the NASDAQ, and just kind of a rough idea of how I trade it. Any one of you can take over. I'll just stop sharing my screen. There we go.
You want to go, Igor?
Okay, no problem. I will just present a little bit my charts.
Okay.
Just to make a little introduction from the last. Oops, it disappeared. When I choose, it disappears. It's really, I hope that you will see. Yes,
there we go.
Yes, I just made what they want. So first, I will start with the British pound dollar. So the setup from the yesterday was as same as the setup for today. And what's happened there is that yesterday I catch the price during this bullish attempt. It was the right at level 1.2930, and it was the pivot point from the yesterday setup. And it was the moment when we just broke the simple moving average 50. And I had in that moment good relative strength index on 30-minute chart. And what's happened, I wanted to see the bigger push. And after I reach the 1.209070, I didn't close the trade, and a few bearish candles starting to go down. And I closed my trade because I didn't feel comfortable, and especially because I add on my chart Fibonacci retracement from the high-low in the last 7 days. And I figure out that we were at around 61.8%, which means that there is a chance that it's just retracement, that we can react on that level and the price can drop down. I had a very small amount of pips, maybe some 15, 20 pips I achieved in that trade. But what's happened then, I created the same plan for today. And I missed it to enter into the early morning. And what I wanted is this. Let me just show you what was the setup for today. We had I will just show the first candle. The first candle, it was this moment at the midnight. So what I wanted is to check and to some way to see what will be the Asia low and to buy on Asia low. Then I just missed the moment when we touched this trend line, and I didn't made the trade again. So what I do, I wait for the setup number 2 to replicate my setup from the yesterday, and I purchase again around the pivot point. And as you can see, I will just show that for today, just to see can we see that today the pivot point is, let me see, just maybe on this chart. I will put, okay, I will just put some my indicator to show the pivot point maybe better. I will find that dashboard. Okay, it's removed. I think it's a dashboard number. Maybe this dashboard is enough. Just a moment. I hope it will be on the chart very soon. Okay, this is a dashboard that I use to find some interesting patterns sometimes. Okay, anyway, this is the blue rectangle. As you can see, at 1.2930 is again pivot point. I again made a trade, put my stop loss to 1.29, and my target is this level at 1.2965. So it will be 1-to-1 risk-reward ratio. Of course, it's much better Asia low to catch the trend and everything. I missed that opportunity. However, I wait to see. I hope that in next 1-2 hours I will see this to reach this target. What I want to share is most interesting is euro dollar, because the euro dollar made yesterday one setup which is really beautiful. So I just want you to see that. I choose lines instead candlesticks just to see how that is perfect. So if we draw a relative strength index indicator and make a trend line, we can see that the price is almost in the same spot. So the trend line on the chart and trend line on the relative strength index is on the same place. We broke that trend line. But what's happened there, this is one beautiful move that I really like in trading. When we start, and again, we want to touch this trend line from the other side. And that's happened yesterday. And the most beautiful thing that market wait for me 1 hour, because the price oscillates very slow between 1.0825 to 1.0830. That's 5 pips range, very long time. And I enter into that trade, and my plan was to wait to see the price broke 1.08 to make go down more than that. But what's happened, I wait to the end of the day when I see that market is just below 1.08, but nothing happened. I just close my trade, and this was that for the yesterday. Like I said, this was my setup for the yesterday, and for today I show this my setup for today, of course. Now what I want to see for tomorrow, what is my setup for tomorrow? I want to repeat this process again. So if what I want to see the price maybe try to touch this trend line one more again, and what I want to see is that we open. I want to watch the first hour of opening hour of British pound dollar, and I want the same setup like this. I want that price try to go below that level, to go in upper side again, and during the U.S. market, I want to buy Asia low. So this is the plan for tomorrow. So I will repeat this process 100%. Everything will be the same. I want to buy Asia low tomorrow if I have the same setup as today. So I want the price go below S&P moving average 50. I want that during the Asia low to have a new Asia low, during the Asia session to have a new Asia low, and to buy that opportunity again. So we are very close, I think 5 pips to the target. I hope that we will achieve that target and that my trade will be positive. Then the next pair that I'm watching is Aussie dollar. The same trade, I didn't change, nothing more than 3 weeks. I keep this trade, if I remember. So the catch is I didn't close this trade. This trend line is respected. So what I want to see right now is more gains in the future because the both relative strength index indicator trend line and this an Aussie dollar on the chart, both of them showing this bullish trend is not stopped, and I hope that we will see the new highs in the next weeks maybe, and that my trade will be very positive. The next thing what I want, I think this is the last thing that I want to show you, is my setup that I'm talking about last 7 days, which is very close to what I want to do. And I will just show my plan. So what I wanted to see is that US dollar Japanese yen to break this channel. And yesterday, the daily close is above the channel. Then, like I said before, I want to see to retest this line, and we are right now in this retesting zone. However, now when I want to enter into the trade, I'm going to the lower time frames, and I will go to my 30-minute chart. I will just remove this previous trend line. I will add a new trend line right now, and this is trend line. So what I want to see on 30-minute chart, I want to see that the 30-minute candle just breaks this trend line. If I see that, this is my entry moment. I will enter into the trade, and of course this trade will not be the intraday trade. It will be the swing trade, which I will just use, I think maybe a couple weeks, maybe a couple days. I will see what will happen in the market. But this is what I need. So look this. This is really beautiful. We are testing this upper channel, previous resistance, now support. I want to see something here. As you can see on the 30-minute chart, we will, I hope, touch this. But I want to break this trend line first. I will not enter into the trade before we just break this. The fundamentals are on my side because the yen is weak. But the problem that I'm afraid is that U.S. economy and the U.S. dollar index can start to go down again, and we will have 2 weak currencies, and that can be really, really unknown situation. So this is the something that I don't know what to do. But the last time, Jannie, just you gave me the nice idea because I already have Aussie dollar long-term trade. I can make a buy order for US dollar Japanese yen, and it will be some kind of hedge of the position. So there's no problem with US dollar anymore. So I can monitor and keep that trade for the longer term without any problem to think about US dollar. So these are my setups. Do you have some opinion about this?
No, very cool.
Just one question, Igor. What's your thoughts on GDP coming out on Thursday? Is that because I'm not sure what time frame? That's one thing we don't talk about. That's the daily time frame, right? So if you get your bias on longer time frames, like for example the daily, do you day trade them, or do you leave your positions open for multiple days until it reaches a specific target, or how do you actually play it, if that makes sense? Like you got your bias now. Like we're looking at the dollar yen, and yes, definitely closed outside of the channel. And you're right, we're definitely retesting. So
Yes.
so if that go, but sorry,
yes,
yeah.
please. Yes, please tell. I didn't want to interrupt you, Jannie.
No. Like I was just going to ask, like if you can see that okay, the retest is holding and it's trading back to the upside, then how do you? What's your entry criteria? If I could, you know, what's your actual? How do you going to implement what you see on the chart? Like, are you going to smaller time frames? Are you? How do you play it? And is it just for intraday trading or?
Usually like this. So this is the maybe the best example. So what I do, I start every my swing trade starting usually as an intraday trade. Sometimes as an Aussie dollar, I really create a intraday a swing trade where I have a really large stop loss, 150 pips to achieve 500 pips or something like that. But in this case, because I have some kind of uncertainty, what I will do, I will of course put a smaller position here, and I will wait the price on the 30-minute chart break this trend line. My stop loss will be the daily low, and I will set my open target, and I will wait to see what will happen in next 24 hours. If I see the strong push upside, and we just break the previous high from this candle, everything is fine. If I see that something is not right, I will close my trade in some moment, but then I create a new scenarios. Usually either it will be stop out, because I have that stop will be usually 30-40 pips. It will not be something far away, but I will just wait and see what will happen next 24 hours. And that procedure is not so bad, because my intraday trade will just become a swing trade, and this is it. So we will see. This is, for me, this is little bit unpleasant trade, just because the fundamentals.
Yeah, well, that's how I feel about the pound US dollar. I don't like the price action on the pound US dollar. I was expecting it to pull lower, to be honest with you. This is also something I discussed. Yeah, we discussed this in last night's the third session. I was expecting the pound US dollar to head lower to at least the I'll tell you now the area. I don't know if you can show it on your chart. Like if you go to the pound US dollar, if you look at the 1 hour chart, if you look at the 1.286 level, you see 1.286. Okay.
286, yes.
There,
yes, I know that level, yes.
Yes. So that I was expecting it to pull down to at least that level, or even slightly lower to 1.284, which is the Fibonacci, or which is a 38.2 Fibonacci retracement on if you draw your Fib levels on the monthly candle itself. So I was expecting to do that, but the current price action is not, for me, like it's not clean. It's not clean price action. You know,
it's very, very messy.
Yeah. So for me, the best setups are like, they're really obvious. They just clean, and it's very clearly breaking out of resistance or a zone or whatever, and you get the retest, and you can read it so much easier.
Do you trade the sterling though, Jannie?
Yes, I do. Yeah, I do. Okay. So I would, but my bias was short, not in a short position, but my bias was short. And right now I can see that obviously it is pulling back up, but I am not convinced in either direction right now. I don't like that price action. I honestly still feel we slightly topped out, and it will be interesting to see what happens on Thursday with the GDP numbers coming out. If we're going to get like maybe a push lower, or just even if it goes higher, it's going to move without me. I just won't be interested, because I just don't. It's not obvious to me. And this is someone else with a different approach will look at the charts and go, yeah, that's definitely going longer, right? And they max out on their lot sizes. But for me, it's not. I really don't like this price action. I would like to price to come to a very strong support level. So if it can come lower, I'll be interested. But if it doesn't do that, then I'll just wait for something else that, or I'll just sit and wait for it to present me with an opportunity that is obvious. Simple as that. It's as simple as that.
Gotcha.
Yes, I will just share my way of thinking related to British pound dollar that maybe I repeated several times, because when I watch these major currency pairs, for example, British pound dollar, as you can see on a daily, this is the market structure. We can see 3 months we are bullish, 3 months we are bearish, and etc. So this is some waves. We have that situation from 2016 up to now. It's a 9 years we have this kind of situation. And when I monitor, for example, this market structure, look, this is market structure, bullish market structure from the last year, or this bearish market structure from the last 3 months in 2024. What I realize is that the biggest dip, the biggest push is around 2 daily average range. Let me say 200 pips. And it's the best thing that can happen, because imagine that we touch 1.3 like now, we go to 1.28 level or maybe 27.60 and go up. It's beautiful. But the problem is when I see this scenario, when we have a drop, then we go up and it goes slowly and everything, usually the market structure, which is dominant, and in this moment it's bullish, conquer this push, and usually we can see the new highs. And because of that, I'm already ready when I have a bullish market structure for this period, for these 3 months maybe. I'm always ready to buy, and I always thinking about buying. Like now, for example, I like it's not swing trades. It's not a long-term trade. Only on intraday sessions, I like to buy because I know that the overall market structure and the market is on my side. But I don't like the price, because the best thing that can happen is to make real good pullback so I can enter into trade and relax a little bit. But in this case, it's really sideways market. And I know that a lot of traders right now for major Forex pairs losing money just because of these sideways moves.
Yeah.
And it's a little
Very
bit
messy.
sad, but we will see what will happen here. But I see the market structure still bullish, and we are really, if we make a channel, for example, right now here for a British pound dollar, we are really in the bullish momentum. You can see right now. So there's no room for some bigger down move right now. But I want to see that. So we will see. So the same feeling as you, Jannie. I have the same feeling about all these major Forex pairs. And one thing to add about the GDP that I realize that in this month, every GDP that we had, for example, I will just give you the last one for the New Zealand dollar. We have a minus 0.1%. We got 0.7%, just much better than expected. And in the same day, instead of the New Zealand dollar to go up, we just went down. And this in the moment after the news, and it's a really, you can see that it's a really, this candle, this bearish candle is in the moment when we got excellent news for New Zealand dollar. So it's non-fundamental move. So and this is why any kind of the news that I can see for US dollar, either dovish, either hawkish, I will just wait to see how market will react in the first 24 hours, because I think that everybody confused. I am confused. So it's like Paul said, no man's land. So like that.
Yes, well, just a quick update on the NASDAQ. We did pull back up to the breakout level, and we are starting to push back to the upside, but there's no real opportunity lining up for me right now, but I will make a noise if it does. Sorry, Richard, over to you.
Igor, can I quickly share my charts?
Yes. I just I just stop my charts, and I
right.
just have a question for you, Richard, because I heard that on Monday, President Donald Trump introduced, he called secondary tariffs, a new economic treat aimed to countries buying oil from Venezuela. So I just want to see your opinion about oil. I just wait for that.
Crude oil's been flying to the upside. I was watching yesterday with James at on a higher time frame. I'll probably share that with you guys here once I go through the others. Look at first the potential setups for today, and then we'll look at a longer time frame on crude oil, and just give you an overview of what I think is happening on the bigger picture with crude oil. But before we do that, I'm looking at the SPX 500. Again, I want setups to occur between 9 a.m. and 11 a.m. Mostly with a strategy, you get your setups occur around about the market open, right? There are sometimes instances where it's slightly before that time window. If there is a setup according to what follows next, like price structure breaks, that sort of thing, fair value gaps that form that I use for trade locations, then I will just stay out of it, right? I'll then look for other levels that price might be moving towards and might break and then give me those reversals, right? So here on the SPX chart, you see this pink line I dropped in there, around about 5,783, were a set of lower highs that occurred here on the 7th of this month, all right? So quite a little while back. There's a little gap we talked about yesterday. I don't know if that's on the futures though, but it's definitely on the CFD side of things. This has only been filled yesterday, so there goes that little gap question as well. It took a pretty long time before it was filled. It won't necessarily be filled within a specific time limit. It's just filled when it's filled, right? So this was only filled yesterday. Now, with my strategy, I like to see price run important levels. In this case, it was a lower high. And you can see, before I get to today's current price action, last week, Friday, for example, price moved into a low. It was a zone where previous lows formed, as I call cluster lows, or area of clusters of highs and lows, pulled right back into it, and that was actually the low for the day. We had a beautiful strong move up again within that time window. The day before that on the SPX, and we were actually looking at this live in the trading room during the morning session, we had a cluster of lows. It was the overnight session low as well at around 6:30 it was, price-wise, and a previous day's overnight session low, right? And this was on Thursday, if I'm not mistaken. Price nearly ran that, and it just moved straight to the upside, right? So unfortunately, didn't get a setup, but just shows again that you typically, and this was right at the 9:30 a.m. mark when the stock market opens, when you had a nice massive push to the upside. Now, as we close the room, and I've only seen this the next day, there was another setup to the downside here, and again, price running a few clusters of highs, right? It didn't reach this high over here. Doesn't really matter. Quite often, I like price moving towards clusters. We had lots of highs and little lows come in, right? If it's a bit wider than just a simple line, then you can make a little zone there. You can see price just ran that and then move all the way back down again. Right, so that was quite a few nice setups last week. To kick off this week, nothing's happened yet. Yes, there was a little reversal yesterday to the upside, but price was just a trend continuation type of trade. It didn't really reach like levels that I was interested in trading. So that's that level that price just before 9 a.m. ran, and now we're seeing a decline here. Now, is this just corrective? I can't tell you. Are we moving towards potentially the overnight session lows? That could be an option. All right. So I'll be interested in a long trade in this situation. If price can then take out, let me just get my price on these clusters of lows over here. Maybe it's going to be better just to use a little bit of a zone rather than actual lows. Right. So we had a cluster of lows over there. So if price could run that during the time window, give us a move back upwards or a bounce to the upside. if that doesn't occur here, then potentially these lows of the previous day, right, could be a next area. So you don't necessarily just want to jump in when price takes out those lows or highs or those levels that you're watching. You want a reaction from it. And that reaction for me is switching to a 1 minute time frame. I want to start seeing break of price structure. In this case, as price moves lower, I want to see lower highs being taken out to the upside. Did we see any fair value gaps that formed, or acceleration gaps, I like calling them, while price was taking out those structure points, previous structure points? And if that all does occur, then I'll be interested in the trade. Right, so there's quite a few things that need to happen, all about following price action and seeing where price is heading next. Unfortunately, this would not have been a trade for me. I would not have jumped in yet, mostly because a lot of these setups actually occur around about the 9:30 a.m. mark or slightly afterwards. It could also be late in the day, like I showed you, when price actually set up here, nice short towards the end of the day. Missed this one, or not the end of the day, towards the end of that time window when we actually closed the morning session trading room already. So this is what I'm looking at. I'll be keeping an eye on around about 57, what's that, 53-ish, 5752-ish level. Very small zone. We can get a run of that. Hopefully it happens during the time window before we close the room and we get a bounce. Then I'll take things over again, switch to 1 minute chart and see if we can get a trade going there. Right, that brings me to crude oil. Before I look at the higher time frames, same thing was last week, Thursday. I was actually with, who was it, with Walter, I believe. Wasn't it with you as well, Igor? No, I was with Walter and James, I think. Last week. Also during that same time window, same strategy. Price broke a cluster of lows. It was actually overnight session low and a previous day's higher low, sorry. Where we had a cluster of lows. Again, a little zone rather than just a singular level. Price ran that and boom, it went straight to the upside. Now, at that stage, it moved so fast that there was quite a few fair value gaps that formed on a 1 minute time frame. But as you can see what happened here, it just moved straight upwards, skyrocketed. And it was unfortunately one of those situations where price was just moving too fast, didn't get a chance to get in, didn't get in a little small pullback, and there you go. Unfortunately missed it. But fast forward to today, what's currently happening. I'll be interested in a trade here because crude oil has been pretty strong bouncing, and we're going to be looking at the higher time frame right now. But I'm looking at a level here at 70.36, so that's still like $1 away. That's quite fast still. If you look at a longer time frame, like the 1 hour, it's actually a little cluster of lower highs, similar to what I showed you on the SPX, which is obviously a different market, but for purpose of explanation, around about 70.37. That if price were to reach that and break that and give a little reversal, then that's something I'll be interested on on crude oil, WTI. All right, so price really has to get all the way down here for me to get interested on crude oil, which is still far away as well. It's about 40 plus 30 is like 70 ticks away or pips away. So from a setup perspective, potentially ES being the closest, if we can see these lows being run, the overnight session lows, and then potentially get a move back upwards again. This might just be corrective. Price might just continue upwards from here, find support, and not break these levels, and then there will just be no trade for me. Simple as that.
Yeah.
Right.
Yeah,
so
that's the way to.
Sorry, no, go ahead. I'm going to switch it.
No, I was just going to say that. I was just saying that. Yeah, that's definitely the way to do it. That's all.
Yeah. Now, to answer your question, what I'm thinking is happening here, just from a technical perspective, Igor, maybe it will be best if I switch to a trading view chart here quick. Because I did share that yesterday. Just bear with me 1 second. Let's see if I still have that open. So I did mark it. But I'll have to probably switch screens here. Stop sharing, and I'll quickly go to the other tab. Apologize about that. Let's go to that one over there. I was speaking about crude oil in quite a length, or actually James kicked off the conversation yesterday. And we were both sort of, have different type of analysis from a, fundamental perspective or technical perspective, whatever the case might be. More from a fundamental, we sort of agree what potentially could be happening here. Technically, we thinking that because price has been bumping, or let's say finding support around about the 65 level, slightly a bit lower, right? And then giving us sets of lower highs right into there. It looks a lot to me from just a pure price action or pattern perspective, like this could potentially be a descending triangle formation. Meaning that we could potentially still get a breakout here. Now, if you look at, and this is now just looking at CFDs again, not at the futures charts. I was actually there on the day in 2020 looking at crude oil going negative. Now, depending on which contract you were following, I believe it went as low as, and there's a lot of debate about this, but I think it went as low as minus 40 or something like that. So the day crude oil actually went negative. So it makes it difficult from a, let's say, pure technical analysis perspective to go and say, like, because this was actually in a negative value. Let me just get rid of that. If price is correcting lower, where is it actually heading? Of course, I don't know if you can go and anchor following the futures markets, your anchor point for start of a FIP retracement at a negative value. Does that make sense?
Yeah.
It completely threw out all the conventional thinking and technical analysis when it comes to basic stuff like FIP retracements and those sort of things, just because crude oil went negative. You know what I mean? It kind of threw everything afar a little bit. So, but anyway, let's just stick with what we chatted about yesterday. And I'm thinking that crude oil in the near term, and potentially for a few weeks still, potentially, could be heading upwards in, and I think I'm bullish. That's what I'm trying to say. Still a bit bullish. Sorry, I'm not used to this trading view platform. I just want to get out my path tool. If I can find that. There we go. So I'm thinking price has still got a little bit of a distance to go bouncing upwards here. How long ever that might take, who knows? And then potentially get that break. But I'm viewing this entire thing as corrective, where this is a triangle, move lower, and then potentially back up again. Now, whether it goes to new highs, who knows? Right, in the bigger picture, and again, we're looking at a weekly here, I think we're still in the midst of a triangle. Now, if you want to delve a little bit deeper into triangles, all the internal waves, as theoreticians would call it, trace out 5 waves. All right, we call A, B, C, D, E's. Maybe I should draw that. If you look at, let's say, a symmetrical triangle, some people might call these flags or whatever the case might be. If you're looking at a bull market, price moves into a high and then starts correcting. And as it narrows, you finally get your breakout, trend continuation, right? That's just a pretty basic symmetrical triangle. Now, the internal waves of symmetrical triangles are labeled by logicians as A, B, C, D's, and E's, right? So 5 internal phases or waves before you typically see the end of a correction and then get that breakout. Now, The same goes for descending triangles. And I'm actually going to quickly draw a descending triangle here. This is assuming we are dealing with one. But with trading, you never know, obviously 100%, but at least if you can, try to form expectation what might be happening, then at least you got some sort of plan, which is mostly, 99% more than the ones that don't have a plan.
Yeah, for sure.
In this situation, typically descending patterns are bearish. So I'm viewing this as the end, whether it's this low or this low, as it first jump higher. Now you can really get technical with this, and you typically need to see 3 waves of that form each one of these 5 internal waves, right? So that being this one, maybe a little expanded flat move. I don't know. I don't want to get too technical, but that potentially there for me was at A wave. This move lower here, since this move over here around about September last year moved below this low, failed to break or came very close to those previous lows where this, I still believe, correction started from. I'm viewing it as a very drawn out B wave. This looks like a little 3-wave move. That makes sense.
Yeah. On a very, very long time frame, though. This is the weekly.
Very long time frame.
Yeah.
But often it's clearer viewing this on a higher time frame if you want to perform this analysis. Yeah. Good luck trying to do this on a small time frame. I tried for very long. it's insanely, it's insane. But anyway, I'm thinking now that was a D wave. Oh, sorry, let me just go mark this from an Elliott wave perspective. A, B, C. Now the question is, and we were scratching our heads about this yesterday. This just looks like a 1-wave move lower, right? So we're sitting sort of, I'm talking this already happened here from that being the C wave there, right? 1 wave lower. So I'm thinking maybe that was a D wave, and now we're moving up an E wave, and then we're going to get that decline to break these lows finally. But as I know, trading commodities for quite some time, when you see these patterns, traders tend to jump in them too quickly. Gold's also another one, loves to go into these very long-term type of corrective patterns. It frustrates the hell out of everyone, and everyone just jumps in too early, So when it comes to using loosely Elliott wave analysis, I'm still thinking that, let me just get rid of that again, my path tool, that, potentially the A, potentially the B, potentially the C, maybe the D wave is doing this though. Then we get that E wave and then we break down. So it could still be quite a long time before that occurs.
Either way, I think it's like, sorry to interrupt.
Yeah.
I just think that is like what you're saying, what could happen. And I think the best thing is to just look at the next formed candle, because that will give you such a strong clue in terms of what you can expect the next candle to do. And you just build it one candle at a time, Anyway.
But if you were to also look at your internal waves of, Elliott wave moves, your triangles, they tend to repeat, especially with descending triangles or ascending triangles, reaching these ratios. 50% is not a Fib ratio, it's just half of that range. So if this was an A wave and this was a very drawn out B wave, and this was what looks like a 3 D wave or C wave, sorry, it reached the 50%. So whether that's going to repeat now again, who knows? But even if this was, let's say, a D wave, we still got some upside potential. So this just tells me I'm bullish over the short term. I still think there's upside potential here. And then we can look at things like you say, like how does a candle close on a weekly, maybe get early warnings from your dailies or your 4 hours when price structure starts breaking to the downside, and then, change your opinion. So, very interesting. I'm viewing this as a descending triangle, and I don't think it's over yet. But I've been expecting this move to the upside for quite some time. And that's very minute, actually, for crude oil, to be honest. right? You look at all these previous moves, it could make it all the way back up to this downwards trend line here. Maybe, who knows? So, Igor, hopefully that answers your question. That's what I'm looking at. And then James sort of said, I won't say agreed, but we shared sort of the same type of sentiment here on crude oil. That whatever's happening here might just be a temporary bounce of an incomplete, bearish, descending triangle. Big mouthful. But that's what I'm yeah.
Okay, well that was very good. Igor, do you have any other pairs you want to share? Oh, actually, I just wanted to quickly follow on, Richard, that you pointed out on the 20th of March, that price action on the S&P 500.
All right, let me just stop this.
I had something very similar. Well,
that one that just shot up.
Yeah, it was a big drop pre-market, and then it just shot up during the market open. That was the 20th. Now, why is it not showing? Okay, there. So that was this day over here. And it was also the day after the FOMC. Day after FOMC, we took out this entire move, and then it just shot back up right to the resistance area. Well, this was the market open candle right there, and it just kept moving higher. Now, I didn't get anything here because the market just didn't kind of come to me, right? It just kept breaking higher. So when that's the case, I miss the move, okay, because it's not playing into my hands. But on the way down, I did get two opportunities, and I've got this. I just got it ready when I saw you showed that. I do have that recording here as well.
Nice.
So yeah, I got two trades here, and you can very clearly see on the 15-minute time frame that price is rejecting that resistance area with a confirmed bearish closed candle, and the same on the half-an-hour time frame, confirmed bearish closed candle. Remember, I want to get 2 out of the 3 to agree with to get my bias. The 1 hour is just like in the middle of nowhere. Okay, so in this case, I will just like ignore what's happening there because I can get my bias from here, and that makes perfect sense. Like a very clear rejection there, and as well as on the 30 minutes. So my bias is now short, obviously. So now from that point, I go to the 1 minute time frame, and I want to find an entry that makes sense. And in this case, the 1 standard deviation VWAP line, it rejected from there, and that's why I entered the trade there
twice.
Okay, there's actually this sound on this video, so I'll just press pause quickly. But I recorded the videos with sound, and then I realized when I play the video you can't hear the sound, so I'm not recording it with sound anymore. So I'm gonna have to just listen to what I say and then talk. Okay, I just showed that, did that as well. 1 standard deviation. Oh, sorry. Okay, so that's the trade. The line I drew there, that's the previous low, and that's where I'm taking profit on this particular trade. Okay. But the bias is on the longer. Yeah, it was a nice little move, and there you can see I just closed the position. Okay, so then there was the second one. Okay, there. Okay, so my bias is still short because now I have 3 bearish candles on all 3 time frames, and still with this with the idea that it broke the it didn't break, it found resistance there, and the pivot point is a very good place to expect the price to move to, right? Or a very realistic place for price to move to. So my bias is bearish. We get the breakout. You don't trade the breakout. I never trade the breakout. Okay. I always trade the retest, like always. And this, you're going to avoid so many false breakouts when you do this. But at the same time, you're also going to miss out on opportunities like this when it just keeps moving. But it will, more often than not, it will come back. I say more often than not, but it will enough times come back for you to number 1, avoid false breakouts, and number 2, to identify much better entry levels with a very tight stop and with your profit target. Let me just Okay, that's the retest. Yeah, so I want to see it fail. Okay, so I'm basically now waiting for to give me another breakout. Let me just forward this. It's a bit. Okay, I got in there. The stop loss is just a bit too quick, but you see when it came back down, that's when I entered the trade. The stop loss is well defined. I drew a line there. It's making like a little pivot, right? So it's a breakout, retest, and then it comes and breaks out again, and then you can identify your stop loss very, very accurately or clearly at least. All right, and then the take profit is the pivot area. I think I actually chickened out of this trade a little bit too soon. No, you'll see. Then there was okay. So I just got out there because like when I see a big sized candle with a big drop, I just know. Well, in real time anyway, I'm like, yeah, this could pull back and form halfway or form like a bullish, like, you know, that's just how it is in real time. It's not, you know, it always messes with your mind. But yeah,
For sure.
Anyway, I got out of this trade right over here just before the pivot point. But just to go back to the charts, you can see that it did go, you know, past the pivot point. But that was the area of, you know, or a good spot, realistic spot, because if you get this big drop and a big move to the upside and you can get clear rejection, you're in a range, right? And it doesn't mean it's going to go all the way to the lowest point, but the realistic point would be this pivot point, which is more or less in the half of this, like if you take it from this low to that high. So yeah, I just wanted to point that out that, you know, look, but I've got no trades for when it went up.
Yeah.
So, you know, like there can be a big move in the markets and you just have to sit and watch it, and you're not part of it because it's not playing into your hands.
Yeah, I mean, just as fast as it went up, it just reversed.
Yeah.
Well,
this is so
very volatile.
But anyway, very volatile. But yeah, today is also not looking great.
No.
It's a bit messy. I know there's not really any news apart from Richmond, no. Where's that? Isn't there like a FOMC? No, he already said what he wanted to say. Nothing happened.
Yeah, that was earlier. That was at 9. So new home sales done already.
Yeah, I don't think new. I think building permits is more significant than new home sales.
Yeah.
Richmond Manufacturing Index, not really. It's a bit indecisive today. But yeah, so I don't know if I have anything else apart from I'm waiting for some opportunities to trade. I would like to see a little breakout there and then a retest. But it's not it won't be the greatest opportunity because we got the 2 standard deviation right above it. But we'll see. Like if it does break out and give me a retest, I will take a small trade. Maybe just reduce my trade size. It's just to demonstrate exactly what I look for in real time as it play out.
Same here. I'm not. Don't have anything setting up.
Well, how's the what do you call it? The pound US dollar doing? Oh, that's dropping now. It's coming down. Yeah, I mean, I think if you're in the pound US dollar trade, or if you are in a trade, it's nerve-wracking times to be in a trade like that. It's horrible, man. It's just it's horrible. Like even this. See what I see this peak as. I think this was yesterday, right? Yeah. Yesterday. That is just, I see that as a higher low. It's just a higher low, right? If you look like that, it's just a higher low. So, and now it's doing that again. So yeah, I remain bearish, and I may start to get interested if it goes down here, or maybe the 38.2. And by the way, the FIP levels here is not drawn on just what I see here. It's drawn based on the monthly time frame.
Monthly time frame.
The candle itself.
Gotcha.
Okay, you draw FIB levels on the monthly time frame itself, and when you go to smaller time frames, you can just see the levels more clear. But Igor, do you agree with that? Do you also think that this is a bit of a messy chart?
Of course, this is completely messy chart, but when I have position that I already open, I just make plan what to do. So, for example, right now I'm watching this pivot point area. We're above that area. So I just want to see what will happen with price. I would like to see again, maybe to go to 1.209060, maybe another rejection, and to close today somewhere in the pivot point area, and maybe today to create the similar story like that we have last 2 days, and just the price to be in some kind of range before the GDP. So I would like to see something like that, just some kind of the range, and maybe I can play in that range a little bit if that range, because like I said, this trend line that we have on the British pound dollar trend line that's coming from the March 21 up to now, it's a bullish, it's a little bullish trend line, and we are.
Oh yeah, 21. Yeah.
Yes, so the 21 down. Yes, you can draw another trend line to get a triangle pattern. You see this three
No,
lows.
I can't. No, you're gonna have to show me. I don't see a triangle here.
No. I just want to say this. So the low on the March 21, March 21, March 24, and the March 25. March you can make one trend line.
Like you mean that this yeah?
Yes, I think that. So as you can see, this is some kind of triangle pattern when I expect that we move before the GDP just to oscillate in that triangle.
Okay, yeah. I mean that's a very similar take on Bitcoin. If you look at Bitcoin,
yes,
we in a overall like a broader downtrend, and currently we have this little uptrend within a broader downtrend. So for me, this is the critical point right at that this cross.
Yes,
this is the critical point there. And then from that point, I'll change my bias to long. But for now, it's still short. It's still short until it can like break out of this much longer time frame or much longer, broader downtrend. So until then, you just do nothing. You wait until the price becomes obvious. Just like when you scroll back on your charts and you look at all the obvious points of entry, right? You look at it, oh, look how obvious that was. Always easy in hindsight, right? Yeah. But at the moment, I don't think it's very clear. And if you look at it will probably be easier to spot you on the 4 hour. You see that on the well, let me just go to the 4 hour. It did make that higher high, and now this pullback is coming right up to the support. So it's definitely looking more bullish than bearish at the moment. But I just feel like it's not really the right time yet, you know. So I'm just like, the reason why I'm showing you this is because I think it's more or less the same thing that what you are saying on the pound US dollar. You know, it's still not clear yet. Yeah.
Does that make sense? We also have a question there on YouTube. I don't know if you're watching that on the side from Andre.
Oh, Andre, yeah. There you go. This is you can take this one, man.
Right up your alley, Igor.
Yeah. Well, you can share your screen if you want, Igor.
Okay. I can show the British pound dollar again, just to find it like this. Yes, this is the messy chart. So the US consumer data didn't create as much volatility as I thought it would. So yes, but so I just talked about the fundamentals for all US dollar pairs. So we had GDP for Aussie, for Kiwi, for a lot of currency pairs, and the market just reject all that results just went in the opposite direction, and it was a little bit strange in last week. So all these data that we had, for example, yesterday we had I think a PMI for all major currency pairs, and nothing happens. Just a small range, even very poor volatility. So like I said, based on the statistical data, when I watch the volatility, I think that the biggest impact in volatility we can see when we have a CPA. So the CPA, Consumer Price Index. So I think this is the most volatile market in the moment, and of course NFP. For all other things, market, even when we have a drastically unexpected numbers in GDP, fundamentally that will have impact, but market will never react with a huge volatility when we have a GDP, for example. And this is good because we as a traders can create different plans, sometimes wait for some swing trades or something like that. But if for intraday sessions, it's not good because sometimes really we need a little bit bigger push up, down, little bit volatility to be a little bit interesting, because we need powerful price levels. Right now, we're just, for example, British pound dollar, we're somewhere in between the 1.29, 1.296. This is this boring range that we have last, I think, 7 days. It's a very boring range, and I don't know. Something needs to happen we need to see something here. But I just talked about that strategy. What I will just show you one chart. I think that it can be like this. I will just, or maybe to find some clearer chart. Just a moment. I have some problem with. Okay, maybe I can take let me just see some new chart to open just for this example. I will put only relative strength index oscillator to be simple, for example, like this. So I will put 30-minute chart here. Maybe it's like this. Maybe like this. So what I like to see sometimes when we have a boring market is when I draw a trend line relative strength index like this. And when I see that I have March 17 up to March 24, for example. So it's a 7 days. That's not normal for 30 minutes time frame. So that means that market is really boring. But when I see the breakout of that long trend line on the 30-minute chart, usually we have some kind of the bigger push, and like we had yesterday, and we can get 20-30 pips in that way, playing that on that card sometimes. Of course, that can be a little bit tricky trade because we have a small number of trades. But for example, my bias, overall market structure bias, is bullish. I had a bearish relative strength index trend line whole week, for example, 7 days, and I break that trend line that had a 3-4 times price rejection. Now we have broken relative strength index trend line, and that is some kind of the opportunity for trade. So we can find that opportunity as market is boring, at least to have one excellent move, and this is it. So I think that sometimes playing a little bit with indicators, with market structure, we can find some interesting trade. But like I said, the best trades are trades when I have additional triggers, when I have 4 or 5 triggers, and when I can relax and have some kind of a setup, because I think that always is better when you have additional triggers. So this is the way how I see the market right now.
Okay. Hopefully that answers your question, Andre. Yeah, the latest consumer data that came in below expectations was the start that the DX or the dollar index began to weaken. Yeah. Look, I mean, I think it's almost like the market is sitting and waiting for something else, something maybe a bit more significant. And I think the this on Thursday, it is Thursday, right?
It's Thursday.
Yeah, because it's the final GDP quarter on quarter, and the forecast is stronger than the previous. So we'll see what the actual looks like. That's definitely going to will have has the potential to have a big impact. But I agree with you, Igor. I think you said CPA.
Yes.
I think. Do you mean a core CPI?
CPI.
Yes, CPI. Yes.
Core CPI. Yeah. Core CPI. Yeah.
My spelling.
No. Core CPI. Yeah. Core CPI. I agree. Is the last one we had was very weak. The last core CPI I felt was very weak. We didn't have a strong reaction, and the same with FOMC. I also thought that was a very weak reaction. We didn't get right direction. We just looked at the charts where it was you had the initial FOMC release, it pushed to the upside, and then pre-market it just wiped out that entire move to the downside, and then arranged right back up, and then just no clear direction. So it was the same with the core CPI, but core CPI is definitely more significant, I feel, than pretty much anything else. NFP obviously has that initial reaction, but I think core CPI is very important. So GDP obviously as well, but yeah, we'll see what happens on that one. But I'm pretty on the pound US dollar. I'm probably more neutral. I know you are bullish. I think. Howard is also bullish. Yeah, he's also bullish on the pound US dollar. I'm also bullish, but I don't like the levels. It needs to move a lot lower for me. Otherwise, I'll just watch it and eat popcorn and watch it go up. And congratulate you guys on your profits. Yeah.
Which is also right.
Yeah, whether I'll get that, I don't know. But Igor, the trend line you drew there, if you don't mind, if you can just get the pound dollar up again.
Okay.
I just want to get clear on at what level you would see this as a confirmation of your of the uptrend, or this is now definitely.
Okay, so right now we're I see first this trend line is bullish that we have.
Sorry, I can't see your screen, Igor. Sorry.
Yeah.
No problem. I waited to see what is it. I picked without any problem. Okay, I can try again. Do you see now?
There we go.
Yes.
It's loading. Yeah, there we go.
Yes.
There we go.
Yes. So this trend line is bullish on the chart. The relative strength index on the 30 minutes chart is bullish too. Our price is above this pivot point area, and we are pushed above simple moving average 50. So the intraday US session, I'm bullish. So the overall market structure, I'm bullish. And this is why I entered into trade, and I expect to see price to be 1.2965. But I think that after this session, maybe I will lower my target, maybe earlier close the trade, because there's no momentum here. There's no stronger push that I want to see. I am in profit few pips, but nothing special on the chart. But like I said, I try every single session to have a bias. I know that it will be 70% accuracy for the bias, but I need to have a bias just because of all other trading setups. So right now it's a little bit sideways. It's not pretty, but sometimes we need to trade from the dirt or to wait to see the new trades with some kind of huge patience. But like I said, this can be interesting maybe if we see something. Like I said, I would like to see this range to repeat tomorrow again, just to repeat before the GDP. So I think that this structure can go up, down, because the last 2 days we have exactly the same setup. The price, my both trades today and yesterday were from the pivot point, for example, the both trades, and this is interesting. So I think the best opportunity here, if I'm trade some kind of the range, is to buy the Asia low near to this trend line and to put the stop loss below this trend line. But sometimes can be dangerous because British pound sometimes just create some crazy move and then again start to go in the direction that you wanted. So
yeah, but the thing is, like, if you do get that level that you just pointed out, with your stop loss just below that latest higher low, then the positive thing about that is your risk is pretty tight, with a much bigger risk reward ratio potential. So that makes sense. That definitely makes sense. But this particular trade with the pivot point, that's a very nice entry. Where would you place your risk? Like, because I can see the pivot point.
1.29. This is the here.
Oh, okay. So it's like
the trend line.
Okay, so that's a 1-to-1. You did say it's about a 1-to-1, right?
1-to-1. Yes, it's 1-to-1.
Yeah. Now, if you can get it much lower, like the pivot point you just spoke about yesterday that you would like it, that's you're expecting, or you would like price to go much lower.
For today, I would like just to see the same process last 2 days. So the same process to be the price try to reach 1.2965, drop a little bit. We have an open during the Asia session. We start to go down. During the Asia session, we are going below the low of the first hour. It's very important to go below the first hour low. And then during the UK time, I try to pick this low very at 1.2091, for example, like that, and to put my stop loss just below 1.29, and to achieve maybe 1-to-5 risk reward or something. So
that would be nice. 1-to-5, definitely.
So because if we are in range market, sometimes I need to be prepared to trade in a range market. So sometimes there's no trend, there's no opportunities, other opportunities, and I can use, because if I need to choose a pair that has some kind of volatility, it's a British pound dollar, because all others, euro dollar, Aussie dollar, Kiwi dollar, they're so slow, so boring sometimes. So
I agree.
I can do a swing trade, but intraday trades, it's so boring. So I don't know, but
that's the only one I focus on as well. It's the pound US dollar. The rest are, I mean, the pound yen can also move. That's also, I think that its nickname is the Beast. The Beast. Yeah, the pound Japanese yen. So, but it will be very interesting to see what happens. So, but anyway, I think that's it for this session.
Yes.
Igor and Richard, it's always great to see you guys.
You too, Jannie. Igor.
Have a great day, and we will see each other soon. Awesome. Thanks for watching the first session.
Great session. Thanks, guys. Have a good one.
All right.
Bye bye, guys. Bye.
Bye.
Hello.
Hey, what's up, Paul?
Not crypto.
Right.
How are things with you?
Slower day to say the least. I figured as much when I have like a banger on Monday like that, on that gold trade yesterday. It's normally not too much action for me later on throughout the week. So I figured as much. I was looking at EJ, and I was looking at Bitcoin, to be honest. I'm actually long Bitcoin, funny enough. I thought about you when I took the trade.
It's a tough decision, putting your money where your mouth is.
Yeah. Yep.
Well, I've got like you can walk us through what you've done, perhaps. And then maybe while you're doing it, I can rattle off I've got just a ridiculous list of news. So do you want to show us your Bitcoin chart maybe and tell us about that trade while I just rattle this off? So President Trump's World Liberty Financial launched a dollar peg stablecoin called USD1.
What?
Yeah. Yeah. There's been a 1 billion Bitcoin transfer from Mt. Gox, which is about 35,000. They're still going to repay creditors, so that could impact the market. They've got to repay creditors before October. Trump Media has announced intention to partner with Crypto.com to launch ETFs. Again, too early to know what that's all about.
Right.
Stock market's had an extra trillion put in today, 1.35 trillion. President Trump has said he may give a lot of countries breaks on tariffs. Thank you, President Trump. He also says that he hopes Fed Chair Jerome Powell lowers interest rates. There's a mafia boss joke there, but I'm not going to make it. SEC to shift focus away from crypto enforcement. Now, this is big. So the SEC has been a thorn in the side of crypto for a while, which I'm sure you know, and has been responsible for a lot of separation. So the fact that they intend to shift away with new leadership, super positive. Can't deny that. I'll give the administration that. And Michael Saylor, and Michael Saylor says he now owns 2.5% of the entire Bitcoin supply. The entire Bitcoin. I mean, that's just not one yacht. That's the whole ocean, right?
Right.
So yeah, a big news day. A lot to make sense of. But tell us about your trade then.
Yeah. First of all, that is absolutely insane. And I did see yesterday that they were talking about some stuff. It looks like they got some foreign investments. I want to say Saudi Arabia or someone put in like $1 trillion. Got markets kind of a little positive on that news. Others are making jokes. I won't make the joke just like you, but they're saying that he just sold America out. but we'll see how that goes. Hopefully, it's not too bad and against us too much. But so cool. So let me. I do want to show EJ really quick because this is the only other one. Let me kind of start from the beginning. I always like to go over GU and GJ. Same thing as yesterday. Remember, I mentioned I wasn't interested in this until I seen some type of one. I was looking for my 250 cross, which I got, and I'm not interested in this until I get some type of information going short. Right. So I didn't spend too much time on this at all. Literally, this is my next move in my cycle, as you guys already know. Got this right M structure, pull back, kind of looking for that move to happen next, right? Yeah. Kind of all of this area is totally blocked off. That's how I can have my bias, right? So I know I'm short here, but lots to happen before I'm actually interested in this setup at all, as I mentioned yesterday. In addition to that, of course, as I always mentioned, just how I showed up the chart, I also want to see my market baseline go above the static, right, for the reload, in which that has not happened yet. Now, yes, the market baseline is kind of trending up, and it's going to make that peak pop above the static at any moment, but I'm looking for more of a move like this to kind of happen and then come back down, right? And additionally, I have this M structure. So I need both to happen for me to be interested in this. that'll take a second to happen. It probably won't manifest until tomorrow, maybe Thursday, right? So not interested in GU too much at all. GJ was more of the same. Actually, I'm sorry. GJ and EG were pretty close, right? But you see, I got my alert up here. This didn't even really do anything, so it kind of started going the other way. So I'm not interested in this at all. In fact, now I want to scoot this down to about right here. Right, so just to kind of cover this really quick. Same day, same stuff, different day, guys. Right, I got my 5200 cross here. So I know I'm looking for W structures off the 200. This does not count. This was nothing. We have a beautiful W right here, right? We went over this yesterday too. Got this beautiful W structure. What I was looking for was to come up, bounce off this 50 EMA, and continue long, which of course it did not do. Whoops, take that off. So I wasn't too interested in this at all. Right. I'd be remiss if I didn't put my my market structure on here, right?
The learning channel.
Always make sure. Yes. All right. So I'm looking for this move, as you see, after the W is always right here. Now, whether that's just one bounce or whether that is a W structure, it doesn't really matter. I was looking for some type of pattern off this 50 EMA, which of course, as you can see, did not happen. So guess what? I'm not interested. I'm not interested in it. Not one bit. So GJ was nothing for me. The only other one that was kind of close was EJ and GJ kind of go together a lot. So as you can kind of see, I have the same. This looks almost like the same chart, funny enough. Yeah. Right, but slightly different.
There's a lot of that going around.
Yeah, exactly. They look nearly identical. So anytime I see a setup happening on GJ or EJ, and if it's close but not quite there, I always look at the other one just to make sure I'm not missing something. Because the other pair might be a lot clearer, right?
Yeah.
So same thing. I got my 5200 cross here. So as I always mention, I'm looking for W's off this 200 EMA, which we do have once again. Nice W structure. And what I was looking for was the bounce off the 50 EMA to go back long, right? And of course, that did not happen. So as you see, I have my EMA here. For me, this is my money trade, right? My fifth trade. This is my C setup, I will admit, but it is one of my 5 setups. If this would have set up, I would have only put on 1/4 to 0.5% on this particular trade.
That's right, yeah.
Not my highest probability setup, but this is a setup in my playbook. So
yeah, so that's a probability, the capital. Yeah,
of course. Because if what happens is if you end up putting the same amount on all your trades, you're not really judging them the same, right? Like
you say of course, right? Yeah. That's the risk, right? I mean, these is a bit basic things, right? But you know, people interacting with the market, it's just whatever's in their pocket, right?
Yeah. This for me, just to, we're good with analogies, right, Paul? So for me, this is the equivalent of, let's say you're playing basketball and you have your star player playing the same amount of time as your player who scores no points. You can't treat them the same, right? Your star player he's a starter. He gets much more time. Your starting 5, they get more time than your bench players, right? This is the same ideology right here, guys.
Yes,
right. So I'm not going to put my full risk on a bench player right here. He's not going to get as much playing time as a star player would.
Well, you'd hope,
right? That's just not how it works. He doesn't pay out the same, so he gets a C in my book, but still a player. He's still a great player. Still makes the team, right? Still puts points on the board when he's not on the bench, right? But from a probability standpoint, this is my C setup. But either way, this never panned out. As you can see, I was looking for a bounce off the 50 and a close above the 13 EMA, which of course never happened. That's why I still got my alert just sitting there. So this was nothing for me today either. But we did get some action on Bitcoin. As you guys, if you've been watching for quite a bit, you notice, ooh, see, this is what I'm talking about right here. Just love it. Just love it. I always say, right, I won't short Bitcoin. I can have the prettiest, what I would call Mona Lisa setup on my Bitcoin shorts, and I'm still not going to trade it. I'm against shorting Bitcoin. Just how you went over, Paul, any news could come out that's for Bitcoin, it's for crypto. Next thing you know, your position is trashed. So I mean, never short it.
Difficult to short a de-inflationary asset. I mean, what I would say to that is there's probably 1 year where you can maybe have that strategy, and that's probably going to be 26, because that's like 22 is the bear market. But I mean, don't short Bitcoin. If Bitcoin's going down, short another asset, right?
Yes.
Which is being pulled down with it.
Yes. Like short something else that, has some slightly correlation, whether it's positive, the same, or slightly different, or the complete opposite. But don't go against Bitcoin. It's like, I don't know, betting against the 91 Bulls or something. Like, come on, guys. Their record of killing it is just too high. You don't want to go against that trend. Trade with the trend. Don't fight against it, right? So
exactly.
I've been saying for quite some time I will not short Bitcoin at all. But if my setup, one of my 5 setups appears on the chart and it's long, I will be all over it, right? And this is classic case in point right here, right? Once again, got my W structure, breakthrough, bounce, breakthrough, retest, M top, right? This is what we have here, right? As I always say, as soon as my 5,200 cross here, and I'll break this one down, further than we did the other ones, right? So once I have that 5,200 cross here, I know I'm looking for, 5,200 cross equals M or W's off the 200 EMA, right? So I know I'm looking for this 100%. This is where I am in the cycle, right? So what do we have after that? Well, look at that. We got some type of W structure here going long, right? Now, this is a trade. I mentioned this yesterday. If you remember, Paul, that you could have taken this.
Yeah.
Like long here. Oh, let me change that to green.
Excuse me, I couldn't hit the move button.
Oh, what just happened? Let me do that again. Right. So, yep. So once we're looking at this. This was a trade, but for me, this happened as I mentioned yesterday on Sunday at like 6 o'clock. I'm not interested in any trades on Sunday.
Yeah.
So that's like the only thing that I will not trade. My signature setup can happen on Sunday. I might take it. I'll be honest. I might take my signature setup, but any of my other 4, I'm not interested in those, especially a setup like this, right? So this was not a bad. What was that?
That's a good plan. I mean, you got to have rules, right? But if you say like, I'm not going to trade on Sunday and let me see my A game, then that makes sense. That's fine.
Yeah, and again, the market just opened, and for me, like Friday and Sundays are what we call trap moves. Like they kind of like to fake you out and then run the other way for the entire next 2-3 days. So I don't trade Sundays at all. Like, in fact, I have my Sunday sessions where I get on for like an hour with my group and we just monitor the market, see what we did good for last week, what if we need to change anything, and the news. That's pretty much it, though. That lasts 30 minutes to an hour tops. But we don't actively trade on Sundays, like not at all. So for me to see a setup like this on Bitcoin on Sunday looks nice, but I'm not interested in it. I'm interested in the next move, right? So for me, basically, right, if we were to kind of just point this out, this is that move, right? Not a bad move, not a bad move at all. That's fine. It's totally fine. And for this is the In this case, this is a W off the 200. Oops, off the 300. W off the 300. Right? So this is that move. Totally fine. It's Sunday. I'm not really interested in that. Not at all. But what I am interested in is this next move, which is right here. Right? Now, this is my money trade. Right? So this I am interested in. And that is right here. Boom. Right? Same thing. This is my money trade. So you see how it's so cool, right? You don't always have to be, and this is why I tell traders, just be patient, you know, like just wait for the next setup. It's fine. It's not the end of the world. It's the market. There's going to be plenty of opportunities to take advantage of some of this stuff. Right? So wasn't interested in that move, right? Which is the W here. But what I am interested in is, now this was slightly different because this was a bit higher. So it didn't really give us, yeah. It didn't really come all the way down here and give us the, like, let's say full retest of this area like we wanted, but that's fine. What I'm more or less looking at is the bounce off the 50 EMA, which is, this was a beautiful, beautiful bounce. Yeah. Right off this blue 50 EMA. So I like to tell everyone that the market isn't just going to give you exactly what you're looking for. That's too easy. If that was the case, everyone would be doing this, right? So you can kind of see how, let's say if we were to take this line, you're like, oh, wait, I'm looking for it to come back and touch this area and then I'm in it. That's not always the case, right? Sometimes it'll do something like this. Yeah. And this is where you as a trader have to be flexible and notice that, oh, it didn't exactly grab it, but that's the same structure, right? The move isn't necessarily this support or resistance line. For me, the move is actually off the 50 EMA, which is, as you can see, there was a smooth bounce. As soon as we got this, this close above and price ran up, this is the first time that price came back and touched the 50 EMA, right? Which you should be all over that at this point. The move is, as soon as price closes above that 13 EMA right here, you should be all over it.
Right? Yeah, and you got a good confluence as well with just basic trend lines as well. It works quite nicely, your system. It's just plop, it just broken about. It's come back down. It's obviously hasn't given you the first retest, but it's as it's extended to the upper range, it's given you, and you've got really nice confluence, which is good. Yeah. Yeah.
I appreciate that. A lot of work put into this. Had I not gotten this far, it was like, all right, I honestly can't tell what I'm doing. Like, I don't know why this is taking so long, but yeah, definitely a good note. But yeah, once that closed above the 13, and then simultaneously, guys, remember I always mention that my chart is at the top and my TDI is at the bottom, right? So I always want to see, speaking of confluence, even more confluence, right? For my bounce trades, which is the money trade like this, I want to see the market baseline, which is the yellow one, cross above this static line, right? So now I know I'm long no matter what. My TDI and my chart is actually agreeing with each other. The next thing I want to see is just how I want to see the first pullback to the 50 EMA on the chart. And I'm looking for this. On the TDI, once this market baseline crosses above the static, I want to see the very first time that the RSI line and the signal line comes and interacts with the 50 static. So it's not a coincidence that price is touching the 50 EMA here, and on my TDI, the RSI line is touching the static 50 at the same exact time. This is the epitome of confluence, right? Absolutely. So once I see this and I see the RSI line come and touches along with the static, the static 50, and then cross back above, just look at this, right? You got the close above the 13, and simultaneously I can see my RSI line crossing back above my signal line after it was the first touch to the static 50. Once I see that, I'm all over this. It's just, I'm all over this trade, right? The only thing I would need to be wary of is once price reaches, just want to make this note here, and you guys are seeing me do this live, which is cool, right? My next bounce point would be this 800 EMA here. So at this point, once it touches, what I want to do is move my stops to break even. So I'll just put SL to BE, stop loss to break even. That's typically what I put nice and quick. Once price touches this area here, that's the next bounce area, and I don't want to have any risk on the table at that point. I want to just move my stops to break even. If it takes me out, it's fine. I mean, it's Bitcoin, it swings, it's totally fine. I just have to make sure I'm sticking to my process, right? Which is following the rules, seeing my setup, and executing.
Yeah,
more than anything, right? So, yeah, this was my my beautiful markup for Bitcoin today. I don't take this too often because it doesn't really. A lot of other setups, right? I can short them and I can long them, so it doesn't really matter what my bias is for that one. As long as it's setting up with one of my 5, setups, and it's short or long, I can take it. But Bitcoin is a bit different. Remember, I'm not shorting it at all, so it's a lot more, let's say, filter on here. I only can take it long. So in essence, Bitcoin, I don't trade this too often because I can't. I can only take longs on it. So when it does happen, I'm all over it. I actually have a very high hit rate on this setup as well, and this pair. Right. So yeah, this was my.
I'm keen to find the time to, because every now and again, I'll be paying attention to somebody, or even a student will just come up with a fantastic strategy, just a little nibble or something maybe, and I'll just I want to take the time to just have a go at it and just get a sense for it. And I'm really keen to really break down what you're doing and just have a crack myself. Obviously, I'm not going to be able to deliver it like you, but it's a very interesting approach. And what really made me think of is that it's like Jannie said, it's interesting how we all come at it from different, with the exception of Bitcoin on Friday, we all come at it from different angles and usually arrive at the same conclusion. And it's all about getting an edge. I mean, am I finished developing as a trader? No, right? I'm always looking for a fresh edge. The market's always different, and your approach fascinates me because you seem to be nailing it. So yeah. Print screen, please.
Right. I'll leave that up there to take a quick shot of it. But yeah, and as you see, I mean, I think something else that's super cool is it's I'm always drawing and saying the same stuff. Like nothing really changes, right? It's the same thing over and over again. We call it SSDD. Same stuff, different day, right? All over again, it's the same stuff. The only difference is the day and the market and the time, right? But these same 5 patterns, they actually appear across all markets, right? All markets. Now, obviously, whether you're trading futures or stocks, of course, your risk might be a bit different because, you got to be able to manage that properly. That's kind of on the trader, right? But the setup, the look of it in this cycle, this happens all the time, like all the time. So my whole thing is to just capitalize on this level 1 and level 2, right? Make that money in the middle, wait for it to turn around. Make that money in the middle, wait for it to turn around. Make the money in the middle, wait for it to turn around. Dot. I think you get the rest, right?
Rinse and repeat.
That's all it is. Absolutely. So yeah, got a little position on here, and yeah, Bitcoin finally set up for me. Haven't taken this in quite some time. I'll have to actually look at it and see when was the last time I took a Bitcoin trade. But you saw it since Friday when we were watching it. We kind of pointed out. Then I mentioned it yesterday on Sunday, so I knew that my next move after the W off the 200 was this bounce trade. So I was super into it. And then of course, lastly, my short-term target for this is just my ADR high, which is right here. I'm not trying to take a whole bunch of it off or anything, right? I'm at 90,500, right? 90,500. Oh, okay. So it's 90,000. I'm sorry. 90,000 is where I'm looking to take this off at. Nothing huge, nothing at all. It's just short-term move, right? I'm not taking this back to 100K. I'm not taking it past 100K or anything. I'm just taking it to my target with this ADR high.
Yeah, we got a lot of overhead obstacles to to get through first before we can maybe hit 95. But yeah, is it, this is, as we said just last weekend, last week, we're looking for anything we're trading. We're just looking for the first signal which gets our attention, because it gets other traders' attention. And this is what's happened. It's like people are looking now. And obviously, there's fresh lines in the sand for Bitcoin to surpass, so we could just continue down. But this is the game. Like, and you would be waiting 2.5 months for Bitcoin to give you that signal. And
yes.
I mean, and a whole market like crypto, which follows Bitcoin, that's a whole market which is waiting for 2.5 months. So it's been a rough few weeks. I'm just hoping that this momentum keeps going, so we've got some easier trading opportunities. And dare I say it, being able to just take a trade and just let it play out for a few days rather than just in and out quick,
No, it's definitely been a bit tough. I'll be totally honest. Like, I'm not as up as I have been in the past 2 years. Like, I would typically be a bit further, like in profit at this point. And not to blame it on like the markets or anything, but obviously we only have a presidential cycle every 4 years. 4 years ago, I was nowhere near as profitable as I am. I think I was still breaking even, right? So me, as you mentioned earlier, are you still developing as a trader? We all are. This is a ongoing journey. This will never truly end, right? I want to say this is my first profitable presidential cycle that I'm experiencing myself, right? But I'm doing it. I like to think that I'm doing a great job of sticking to my guns, not getting impatient, and not forcing trades, because I know, based on data and just previous losses, right, that isn't the best setup to take. Or, it's still a game. Sometimes you're playing offense, sometimes you're playing defense. So I'm playing more defense than offense, at the beginning of this, because there's still a lot of uncertainty. Things are still kind of up in the air. There's this trade war going on, which affects currency pairs directly, and crypto as well, right? So you got to have an extra sense of discretion, as far as if you should or if you shouldn't. Just be a little bit more conservative, which is what we're doing. But again, as I always say, the setup appears, you got to take it without fear. Simple as that. So that's kind of where I'm with it all. But yeah, we're still all developing as traders for sure. Whether you're profitable or not. There's traders making $10 million a year, right, and still are developing as traders.
Yeah, I mean, we're I have like and I'll be releasing through these channels on Ola Prime some really in-depth crypto masterclasses on just basic stuff. Everything from divergence to scaling in to Boston chart change, all that kind of stuff. But you can watch all of those, and you can get the knowledge in your mind. Right, but you need the experience. You need to have gone through a presidential cycle, or you've got to understand. So you've been in this 2.5 months of terrible trading, and you learn how to trade. But you can't do that unless you've experienced it. And no masterclass, no video is giving you insight into do that, because as we're learning at the moment, everything's a new precedent now. Everything's new, never happened before. The time where we're living in the age of stability, it seems to have disappeared completely since the pandemic. So. It's and so we're all of us now, we're in uncharted territory as traders, and we'll come out the other side of it hopefully better for it, but it takes time.
Yes.
Hopefully.
Yes. And there's there's not to even compare anything, but there's traders who are like much further in their journey already, like doing 400K months. I'm like, dang, this dude is crushing it. 400K months. And I'm seeing them down, right? Like, you're like, oh, I lost 100K. Oh, I lost 300K. Lost 400K. And, traders are like, oh, my God, did you, lose your skill? Like, are you forcing trades, or, are you doing anything different? And he's like, God.
Where's my skill gone? Is it in my pocket? I can't. Where is it?
He's like, guys, relax. Like, I'm not changing anything. This exact skill set has made me tens of millions of dollars. I'm not changing anything. This is just part of trading sometimes, because people are following his trades is what's happening. So, they're losing too, and they're kind of experiencing that drawdown and that downside. But I love that he stuck to his guns, and he's like, I'm not changing anything. Like, maybe I might scale down slightly, but as far as what trades I'm taking, it's still there, you know, and that's natural to do. If you're taking some hits, you know, you might want to scale down just a bit so you can kind of find your footing again, but don't change anything. That's like a rookie mistake to keep, you know, course hopping or hopping from one strategy to the next. If you made tens of millions of dollars with this one skill set and 1 year is just not working as good as it should, are you going to change it? No. It would take me a long time for me to change, if I ever changed what I was doing that made me that amount of money. Like, come on, that's a no-brainer, right? But that's a newbie way of thinking, to say, well, you should change what you're doing. No, I shouldn't change anything. I should keep doing what I'm doing, and, you know, ride the wave. Really, as they say, like a smooth sea never made a skilled sailor type of approach.
Exactly. And I think, you know, there is a wider conversation about, you know, beginner traders learning their craft, scaling up their capital, and then once they've scaled up their capital, then it's a slightly different trading environment, because, you know, you have more capital to spend, you can trade less, it's a different approach, but you've got to get there, and we're all trying to get on that journey to the next level up. So because when you first start, I mean, I've met people, really great people, who have got in touch with me, and they've been like, right, I don't have a job, I've been looking at these crypto liquidity pools, whatever, and I need to pay my bills, and I'm like, right,
it's not gonna work here.
Tough love here, guy, but you need to. It is great, but you need to get a job first, right? And then, because you cannot trade to pay rent, like, as in you need to trade because you need to pay rent, right? Because you're then surrounding your whole strategy with emotion, right? And a time limit. So you have to start small, and you have to operate within the capital you have available to you, and then you scale up, just like with prop firms, in terms of what we have to do to walk through the process of getting more capital. It's the same thing.
Right. No, I totally agree. Anytime, funny enough, you even mentioned this, on Sunday we had a beach party here, like a bunch of us met up who moved from the States to here, and we were just talking and, you know, trying to figure out a few things, and one of the guys were asking about you know, like, I'm trying to figure out, you know, how to make some extra money. They told me that you trade and all this. He's like, I'm looking for a job. I'm like, dude, you don't start here. You get a job and pay your bills and stuff first, and then when you want to dabble into something else, you know, you come over here. But you don't start here. I don't have anything for you. That's not how it works, right? Like, you gotta get a job.
We're not being harsh with that. It's like, whenever I've been in a situation where I've had a trade and I've been like, I need this to come in, and it's not good. Nothing's good, because you're not thinking. You're like, well, my target was here, but I should take it now, and it just messes everything up. So
it does. That never works. Like, it never works. I don't think there's ever been a time that I took a trade that I was hoping it won so I can withdraw it to pay whatever bill. I don't think that has ever happened in my entire career. Like, not once. Crazy enough.
No, that's a good thing.
It never works.
That's a good thing. And that's what we're all just trying to get ourselves into. I mean, crypto's different, right? There's a whole different approach. You can say to yourself that just saving up a little bit of capital to invest at the right time in the cycle can then level up your capital naturally by just long-term hodling. And then while you're hodling, you learn your craft, you learn to trade, and then when you arrive at the other end, you've got something you can take, you know, 10k from that, you know, 100k you made from just hodling, and then you've got proper things to trade with, and you're in a solid environment, and you've got capital in reserve, and everything's great. But, you know, or you can do what I do and just, you know, to go on a yoga retreat and then come out of it, do 10 trades really fast, compound your profits, and then just go back to the beach, right?
I gotta love that part too.
We got some new stuff today, some new setups, and maybe we can end with my take on Bitcoin, if that works for you, and anything else you've got at the end. Does that work?
Yeah, that's perfect.
All right, so this can be very this can be very collaborative. So let's just let's just jump in. I'll just share my screen if I can. Here we go. Right, here we go. Okay, so really straightforward. This is the first time we've been talking about setups.
Oh, it looks like it's still trying to come in now. Oh, okay. I can see it now. I can see your screen.
Cool. So we've been talking about Bitcoin and Bitcoin Cash, Bitcoin Litecoin, and Ethereum over the last few weeks. But beautifully, Holoprime has expanded its crypto offering, and now we have hundreds of potential setups to pull from. Now, I'm just going to read this disclaimer just to make it clear. These setups are coins or tokens that are simply providing opportunities to trade. Everything we've been talking about on the streams, whether it's Bitcoin or Forex, whatever, they're just providing opportunities to trade that we're looking at based on established TA, and they're all available, these cryptos, on Holoprime cryptos. You can trade them any way you see fit, long or short for intraday trading or long-term holds. We just provide the analysis, but you decide how to trade, which obviously makes sense because we all have different trading styles. And of course, please be aware that the movements of these assets are dependent on the market, whether the money flow and what Bitcoin is doing, which is why we talk about it so much. So to trade these successfully, ensure you are subscribed to all of our weekly coverage, and bear in mind that in the market, nothing is guaranteed. This is WLD, but let's just call it wild for now. And this is simply something I'm looking at for a setup when I do my daily routine, and I'm scouring across all the different charts and trying to find trading opportunities. We've got 2 or 3 today which have been standing out. So this is a basic reversal we're looking to capitalize on. Now, it's a very clean chart just to make sense. So basically we've broken down here, we've found a bottom, we've attempted to get out of it, and now we've broken out into the next range, and we've got the 200 moving average on the 2 hour is just swooping in below. So there's a few options here. It's obviously a retest trade, so that means, you know, once it's broken out, you come in and just attempt to buy the retest, which is giving us opportunities at the moment. But there's obviously a few things which we need to consider. There is obviously significant support below with this moving average, but it is a little bit lower than we would like it for, so we don't really have confluence. It's about 5% down, right? So when you're looking at this potential setup and you're thinking of trading, you have to, of course, do a little bit more work, and we need to just kind of see what's happening. Is there any confluence we can find? And there is, yeah, that's respected, that line. So now we've got a little pocket which we can trade off potentially. And this is the game. This is how I work. I'm looking for confluence, and if I don't get what I want, like Michael, I'm not going to enter my trade. So we've got a bit of confluence, so this is good. But I like these upwards diagonal lines following the breakout because it just gives us a bit of support. But as you can see, it is not the strongest. So that's the option. So you could theoretically, you know, start your position entries here, and then you could scale in with your second entry here and try and scoop up the bottom. But this would be, given the fact that if we just zoom out, or rather just do this a little bit, we're just trying to find a bit of confluence. I don't think there's a very good diagonal line to go off here. So we haven't really put in a higher high. We're definitely still in a downtrend. This is just a macro reversal. But obviously, because the rest of the market is doing that, Bitcoin also, we can probably look at this support line as a good place to enter if you're thinking of doing a long trade here. And obviously, if you want to do a short here, you know, you've got a lot of confirmation points. You could wait for a breakdown of this line and maybe just short it maybe to the 200 MA, maybe, or wait for a break of the 200 MA for added confirmation. But that's not a setup I'm promoting, I don't think, and not something I'm going to take because it's just the conditions aren't right for a short at the moment. But if you're looking for an entry, you know, medium term hold, if we hold it to this range, solid 37%, and we were last there 3rd of March, so within the realm of possibility if you just want to put a little bit in that and hold it. Secondly, it could just be a straightforward range trade and just wait for it to pop up here for a quick 11%, maybe a bit of leverage if you can. And that's a potential trade here. I mean, you see things differently. You got any insights? It's quite a bear chart, Mike.
Yeah, definitely what you mentioned is that break and retest. If it was going to be long, obviously it can go either way. I mean, yeah, the long seems to be a bit better. The that break and retest would be the ideal place to take that buy. And then short, maybe that trend line look like we are. This is like the third touch on the trend line going short.
Yeah.
But yeah, I will definitely want to see, if it was to go short, a break below all of that, specifically the 200 EMA, as you just mentioned. Because before that, nah, that's still long for me. Anything above that 200, my bias would be more long than short.
Yeah, and I mean, the 200 EMA, this is just a 2 hour. I mean, we could put on the daily and see where the daily is. I'm not sure it'll work on this chart, depending how old the currency is. So yeah, I just like sticking other time frame charts on. So this is just a basic 200 SMA indicator. Just set it to 200 and then set it to the time frame you want, and then boom. But I don't think it's working on this chart because I don't think we've had enough price action, so I can't see it. But the 200 EMA here is giving me the that's the only. I don't think I haven't got enough bullish signals, but it's a manageable trade because of exactly where it is. Because if it breaks lower, you can get out pretty easily without having your stop hit. Maybe if you put your stop underneath here, as an example, below the 200 EMA, just 5% down. It's a little bit high, obviously for Forex and stuff, but for crypto, that's perfectly normal. I mean, just a word about that.
Well, that would be fine, right? Like if you was to, let's say, if you were to take that long on the retest, I would want to put my stop below the 200. I'll put it a little bit lower, below that last swing point. Like, I would put my stop there. Yeah.
Yeah. I mean, in the context of, it depends on what you're doing. I mean, if you're aiming to capitalize on this move up here,
that's a great move,
right? Then that's fine in terms of, risk and reward. And this is the negotiation, really. I mean, that's great. Bang on 3, which is what I always kind of look for. Because your stop loss is protected by this moving average. We've obviously got a confluence here of support. So, but you need to be paying attention to Bitcoin, because Bitcoin will determine whether this goes or not. But, you have to ask yourself, when would this trade invalidate? When is the bullish premise going to disappear again? Now, obviously, it's going to be below the moving average, because that's the 100%. Bullish premise. So that's the setup. Trade it any way you like. If the market is uncertain, then just take your profits here, right? Just in and out. And then, because you can look at it a different way. You could wait for something like this to happen and then just look for a better entry after a stronger bullish signal where we really break in the trend. If you're a bit risk averse, I mean, the RSI is cooking on the 2 hour a little bit, right? So have we got any divergence to offset that? Just no, not yet. So you might say to yourself, you know what? I need to see the RSI cooling off a little bit. And if you can stay above this line by just ranging a little bit and letting that happen naturally, if there's a bit of bullish momentum behind the asset, then great. I mean, maybe waiting for it to hit the 45 line. If you're a bit risk averse, maybe catch a wick down to this support line and then catch the reversal there. That might be it. I mean, what are the traders thinking? This is just my basic process of just assessing something. So this is what other traders are thinking in terms of this chart. We've got some support below. You see there's a nice order block there. So obviously if it goes down here, you're invalidating. So yeah, that's WLD. Good setup. Trade it as you like. Moving on to the next. It's Move USD. I didn't plan that. I do script a lot of things, but not that. So,
no pun intended.
No pun intended. So this is Move 4 hour. Again, we don't really not interested in dating this coin. We're just looking for trading analysis and setups to capitalize on. This is where we were back in December. So this is a fresh token. As you can see, there's the dinosaur we started off. So we got this potential curve happening, this reversal. We're slowly bottoming out. Coinciding, of course, with the 0% fib range, and we're breaking out at the moment. The volume's not brilliant. You just look down here, the volume is, but it's better than it has been all month. So we're looking then for a breakout entry, which coincides with this triangle. We've got the moving average as well on the 4 hour, and again, it's going to be most likely a retest entrance.
That would be my exact entry. For me, that looks like the low, peak low. Look at this setup. You got the peak high to the far left, the M. You got that level 1, level 2 that I would always really go to. And then you got the W structure at the bottom. I would want to see this close above, a nice little run, pullback, retest, I'm all over that retest area.
Yeah. I mean, absolutely. Because you can say to yourself, like, I need to see more, and that's fine. Like, you might want to see a touch of this before you come in for a retest, right? You want to see more bullish confirmation on a simple level. But I'm looking at the fact that the 4-hour time frame is a bit more significant than 2-hour. A lot more traders are on this. So you've got this 200 MA, you've got this confluence with this horizontal line, the 118, and we've got the breakout of this pattern, which, considering it's technically a kind of bear pennant and it's breaking to the upside, that's pretty good probability wise. So you could start to enter around here, around these levels. I think it's probably going to sit around these levels. I don't think it's going to be a clean entrance. So you could say, I'm going to scale in here. If it hits here, I'm going to scale in. And then if it rounds up, then maybe you could come in again here, and then away we go. That might be how I approach it. Or like you said, Michael, you might want to just wait for something like this first and then look to come in, which might be the safer option. But lots of confluence here. Any other thoughts?
Both of those are very, very ideal. Like, whether you catch that W going long, that W structure going long, or you catch that retest, both of them are great positions that I can really justify as far as why I traded with enter there, for sure. Yeah,
and if you're looking at, I mean, this is the game. If you're looking to enter around here and scoop up this bottom, the good thing is the fact that we are in the bottom, right? Even if you're coming in here and we come down a bit, we've got a lot of support below us. This is the 0% fib range. We're always trying to turn around. So, you know, it's not like we're up here. You know, this is going to be quite hard to get to, right? So what we're looking at percentage wise, you get entering around this line, you managed to do that. 140% to where we were at the end of last year, right?
Beautiful.
Yeah, beautiful. I mean, probably right. Let's just go with the 618. I think there you go. 70%. That's a bit better. One more, and then we can chat about Bitcoin. This is Ina. My beloved auntie was called Ina, and she was always dependable. And this setup might be the same.
That's sweet.
Lovely lady. Know nothing about crypto though, sadly. So this is obviously we've got the big picture. I've been trading Ina on and off for a while now, not since this area. So obviously we're trying to bottom. This is where we were just before the election. So as you can see, Ina really struggled with the bearish kind of summer. But as you can see, it moved the second we got kind of, you know, the election was approaching, that election cycle. And this is pretty much, this breakout occurred on election day, just after election day. So not 100% confident that we're going to have a big run from Ina. Unlike the others, there's a bit of the previous price action isn't as solid. So this is a lower high compared to here from following the launch. But this area is what I'll be looking to trade. And we've got this, obviously the descending triangle is a bearish pattern, but we're pretty much, we haven't been below this since 12th of October 24, right? And if Bitcoin is bottoming itself, this is probably going to be the bottom for Ina. So we've got fewer entry points. We could obviously, ideally, we want to be in this green zone. So ideally, we want to front run it and maybe come in here just as a support buy. First position entry, maybe 20% of your position, right? Whatever you're doing. And then presume you're going to have the breakout, and then you could come in again on the retest and then just ride it up to the target area, which is a modest 40 to 50%, depending on where you get in. But these patterns are so helpful because you've got so many options to enter. We're still in the pattern, so you've got to presume we're coming down here. And if you're buying in here, you've got so much control over your trade, because even if you come back down, right, look at it. We're going to have some buyers coming in to get this back into the pattern, at least so you can get out. So you can start scaling in here, wait for a breakout, buy in again with bullish confirmation, or you could just wait for bullish confirmation. But this, I wouldn't buy the breakout here. It's too high up. It's in no man's land, right? There it is.
So dare I say it.
So you're looking to get in here, right? And I don't often suggest you should front run patterns, but when they're at support, I mean, why not, right? So try and come in here. This is your target area. And obviously the target area is defined because of the range, but also because the 200 MA, which is pretty fresh on the daily, is kind of just skating just above it, which is obviously going to be significant resistance because we haven't really had an attack on this since we lost it. But those are the three setups. WLD, move. I'm going to do a separate video on these a bit later as well, and ENA. So any thoughts on ENA?
I mean, beautiful. Same thing once again, right? Like it definitely looks like it's, for one, it's definitely at that support area. Two, that breakout of that trend line would be beautiful. And then if we get and this is the part where I think I always mention, you mentioned rather, is scaling in. Don't put your full position on at that full breakout, right? Like get a little piece on, maybe get a decent position size on. And then, once it comes to retest that area, that's when I will put the rest of it on, if anything, and to take it up to that target area for sure. Yeah. Gorgeous. And plus you said a 40%, that's enough. Yeah, 40% is good.
Yeah, let's have a look. Yeah, these are percentages you can get within a few days or weeks in crypto if the movement's right. But some people right now might be looking at my chart and thinking, well, where's your order blocks? Where's your fair value gaps? Where's all your other things? Where's your fib levels? And I'm like, well, when I'm looking at a chart, I want to keep it simple to start with. And if I can assess a trading opportunity with just a pattern and a couple of areas, then that's all I need. Anything else is going to start confusing me. But if I can't find a trade, or I'm looking for an entrance point or a price target and I'm not quite sure where it is, then I'll start drawing on fib levels. Then I'll look at order blocks, looking for confluence when I need to. But usually when I start doing that, usually those are the trades which I don't take because I'm fighting for an excuse, for a reason, right?
I always say you got to squint your eyes, close one eye, turn your head sideways, then I can see it. If I got to do all of that, that's too much for me.
Well, you've just awoken one of my classic tips, and I can't remember how to do it. But so look, if you're confused and you can't make sense of a chart, people, right? There's a simple thing you can do. Just temporarily invert it, right? It will give you a fresh perspective. So now we're thinking, is this a short trade? And if the answer is still yes, as it was to a long trade, then you're on to a winning setup. But if when you look at it and you're like, actually, I see something different, then that can protect you. So little tip people can use. It's such a simple thing. Just invert it.
Funny enough, that inverted one looks beautiful. It looks just as beautiful as this one, the regular one, right? Classic. Really this is a classic short here.
Don't short it, people. It's inverted. There we go.
Yeah, don't short it, people. There you go.
So let's. I don't know. Have you got? Before I look at Bitcoin, you've got something else, Mike?
Nah, that was pretty much it. I just added whatever I really saw to your three setups. But yeah, classic setups. I love all of them. WLD, Move, ENA, they all awesome.
Yeah. So fresh chart, fresh day. This is Bitcoin, and obviously, if you want to know if those setups are going to work out, well, this will be the determining factor. I mean, if you're looking for a retest if you're looking for say this to come back down into the pattern. Right, so you've got into support rather. Sorry, it's in the pattern, excuse me. If you're looking for it to come back to support for the ideal entry, then what are you looking for out of Bitcoin, right? What you're looking for is maybe Bitcoin to come back down, touch the 1 day 200 MA again around the point of control, and then have a bounce and then have a breakout, which may happen because breakout here, does Bitcoin want to break out here? Because we've got resistance right overhead. How many buyers are going to show up right now? And that's what you have to ask yourself. And I'm not sure. I wouldn't take that trade. I really would want to come in here because then we're at the bottom of this kind of, at least in the middle of this. You could argue this is a range, but this whole range, at least you're in the middle and you've got support. So you could say to yourself, right, so for ENA, I don't want Bitcoin to break out right now because I might miss my opportunity because ENA then might just go, boop, and there it is, right? And it's gone. And you've missed it. So what do you need to see? I need to see Bitcoin come down first, right, come into this area maybe, and then I've got a buy, and then Ina's still got time to work its way through the pattern while Bitcoin does the same out of its pattern. And then hopefully then we've got a better entrance for Ina. And if this line holds, then maybe Bitcoin will have a breakout. We're at a lower level, which won't spook as many buyers because the sellers are overhead. And then maybe we can do this. And this is the negotiation, right? Because we've got a good setup, but it means nothing, right? If Bitcoin decides to do something else, it could be easily invalidated. Right. I mean, look at this is a bit of a strange chart. I mean, how do you? I mean, look in the context of what your analysis of Bitcoin earlier. What do you see here on this chart? It's a bit of a weird mix.
Yeah, it is actually. Like it almost looks like they're saying two totally separate things. I would definitely still be short on this for one, right? Bitcoin 4 hour. This looks like a beautiful short opportunity right here. And if my position goes to, you know what, that's probably what's happening. Right. But yeah, that would, I mean, this still looks short.
Maybe, you know, something like that. You know, keeping the bullish, because we are above the 200 MA, but, and this is traders, what everyone needs to kind of, you know, we're watching for a break, but it hasn't happened yet. Right. And if I turn back to the chart I was looking at, these charts we're looking at yesterday, I mean, this gives us more of a bullish context, right? 70% chance of a break to the upside. This is even more bullish, right? Because we've broken out. We're still above the point of control. You know, we're a bit weak, but we're still above it. But this is why we need to be paying.
My bad, Paul. I can't tell what's going on at my front door here. Give me 2 minutes. I'll be right back.
That's all good, mate. That's all good. So what we're trying to obviously achieve is we're trying to get multiple perspectives on what Bitcoin is doing. And if I reference the live stream we did, me and Michael and Jannie on Friday, two of us, me and Michael, thought that Bitcoin was more of a long trade for us in the short term, and Jannie thought it was more of a short. Now, it's no competition, but this is what people need to understand. If you just listen to me and Michael, you are not having the whole picture of what Bitcoin is doing, right? You're just like, I want to long Bitcoin. Two traders have said Bitcoin is going long, therefore I'm going to listen to them. No, the most complete coverage is also the other trader, which is saying, hang on a minute, I'm actually seeing something different, and this could be a bearish scenario. And then you have all of that information. And if you still have, you know, more bullish signals or more bullish analysis than you are bearish, then you still go long. But if you're trading just based off two people who say go long on Bitcoin, and you're not listening to or looking at the bearish scenario, then you're going to get into trouble. So this is why we have these charts at the moment, where this one is giving us maybe a short-term short signal. These ones are giving us just wait for the breakout and buy, at least up until this resistance level signals. And likewise, this one is giving us more bullish signals that we could be seeing that 95K as well. And then you draw your conclusions based on that analysis. And if you don't have the information you need, then it's a no trade. And it is a confusing picture right now, but I would say that looking at these charts, we have more of a bullish context than we do a bearish one. But as we said with Ina, allowing the price action to come back down to this area, maybe the 1 day 200 MA, and maybe if it coincides with this trend line, then that is your opportunity to enter along on these altcoin setups, because obviously you don't want to be entering a long trade on these setups when Bitcoin potentially has a little bit of downwards movement, because then you'll enter and then you'll be in loss straight away, and then it will go. So wait for Bitcoin to be aligned with you first. I mean, I would have liked to see this pattern ideally line point exactly at the point of control, but that's the negotiation. And Bitcoin dominance, same chart as yesterday, because nothing's changed. You know, what do we need to see for these three setups we've talked about to really take off? Well, right now we're at support on Bitcoin dominance, which is essentially means if we bounce here, that's going to push altcoins lower, right? So that's a point of concern. So what I want, but that might be good for ENA, because we need ENA to come down a bit, right? So if you're thinking of the trade setups, WLD, because we think we might get a bit of downward pressure from Bitcoin, then I'm maybe going to wait for the 200 MA entrance, but then we've got a lot of resistance overhead. So maybe WLD is not the trade I'm looking for just yet. And then we're looking at this, and you're like, right, move. Okay, so I do need it to come down to get my entrance, my retest. So move is an option. And ENA, I need to do the same thing. So you then go back to Bitcoin and think, right, so I want this move for my trade entrance. And then you look at Bitcoin dominance and you think, right, for my trade entrance, I need a bounce here. And then I'll be at resistance, which means if then we continue lower, that is going to money going into the altcoin market. It will propel your long trade, and then away you go. And that's how you do it. I mean, any thoughts on that bizarre juggling act, Mike?
Yeah, I mean, funny enough is classic trend line channel. Like, it's just going to get smaller and smaller, and it's going to break out of there somehow. This also kind of shows that level of uncertainty. Like, is this thing off the bust out to the long side, to the short side? We don't know. The only thing we know is you should wait to see what's going to happen first before you jump in this in either direction.
Yeah.
Right? And if you are like how I'm in Bitcoin long now, it's a very short trade, right? Like, short term. Don't try to hold this thing to 200K or anything.
Yeah, but this is what we see happening when Bitcoin makes a bullish move. This is the money we're looking, right? So if you're thinking of entering a long-term like crypto trade, weeks, months, a year, whatever, we're in the right place, right? Because this is kind of the top, and we could go higher, but we haven't done. So this is why altcoins are all kind of in the inverse position compared to them, and they're good buying options. So we've got a Bitcoin signal, and the market is starting to move. We just now need to just see, what, and this whole negotiation between WLD, I'm not writing this trade off, but looking at the market, because Bitcoin could come down, Bitcoin dominance is suggesting we might have some selling pressure for altcoins because of the money flow. This comes back down here. Sure, I've got my 200 MA entrance, but we're below resistance now, and there's a lot of sellers overhead. So I'm not feeling this trade as much right now. What I would want to see this maybe, and then coming back down to enter with more bullish confirmation, because it's just not right. But these two, I need to come down, which is what Bitcoin and the money flow are kind of supporting right now. So then I have three things I'm waiting for: ENA to come down here, Bitcoin dominance to come up here, and then Bitcoin to come down here. And then if that happens, as long as it's above the 200 MA, even though there's resistance here, I'm probably going to enter, right? Because we're maintaining the posture, and that's it, essentially.
Right. No, good stuff. Good stuff for sure. And it's always so cool how we can jump on and just come up with these different biases and different approach, because at the end of the day, they all make sense. They can all be justified.
Yeah. Well, if you don't have, if you're all profited out with your Bitcoin stuff, you've had your gold this today or this week.
Why
don't we do a bit of edu stuff just to close? And what if we just pick a token and then just construct a trade from scratch? You up for that?
Yeah, let's do it. Let me
just find something I don't know.
Trader pop quiz.
Yeah. I'm trying to find something. Let's have a look. I've got this lovely list. I'm trying to avoid meme coins because they always burn you. So let's have a look at tier. Let's have a quick look at tier. And let's just maybe a bit of an insight into my process and tier. Right. No, I haven't looked at tier. If someone said to me tier's got some good trading opportunities, I would start.
Look at the same thing on my screen here.
Yeah, I would hope so. Yeah.
Let's check it out.
So we're zooming out daily. I want to get perspective, right? Now, you'll all have your own systems, but I'm just going to eyeball this. I'm not going to spend too much time on the trend lines to start with. I'll refine later. I want to see support and resistance. Every trade is different. in the crypto space. Just doing this. And in terms of trend lines, I'm looking for the most touches. That determines what they are. Just again, eyeballing this, not doing it too crazy. Just getting a sense of the range. I don't really care about that because we're not going to be up there anytime soon. And it looks like we are at the bottom, right at the bottom, which is great. We like that. And I'm just going to label it because, you know, you want to be able to see what you're trading. This is my process. Charting is the key to successful profits. Right. So where would you start, Mike, from here? Now we've got some just basic stuff. Where would you start?
So for me, it's definitely that low that you're at right now, right? Just looking at this right automatically, I can kind of see, man, I wish I can annotate on this screen, but I see I got a peak high. I got a peak new level there, low. And then below that, I got another low, higher low. No, lower high, excuse me. Yeah. This is starting to make that W formation to go back the other way for me.
Yeah.
Yep. There we go. There we go. So this is starting to look like that, more or less that long area. There's no real break to go bullish just yet, but it is starting to look pretty good to go long for sure.
I think, yeah. And I think the reason, I mean, the price actions here, this is August, but this line is important to me. Because even though it is a bit janky, it's the daily, so it probably looks better under the time frame. It is fitting, but I want to see, you know, what happened here. Because typically when we break out from we're approaching support, we break out from here, you'd expect quite a significant move. But obviously at that time, August, we weren't having good trading conditions, and we're all the way back down here. We've tried to recover. This is the election pump. Wasn't that strong from tier by the looks of it? So the election pump, okay, well, you know what? 100% is not anything to shake a stick at. But in terms of these sort of moves, so that's the sort of potential we could see if Bitcoin turns around. And we are at support. You can see there's buyers coming in. I'm going to want to look at order blocks. I just want to see what people are thinking on the daily. Right, so there's quite a bearish bias here, right? Because we're just not, it's not giving us anything, right? It's really struggling.
Yet. Yeah, nothing yet.
So what would you want to see then? It's definitely a break up to the upper range first before even considering
For sure,
it, right?
For sure. Yeah. And I wouldn't want to take just the first break, right? Like at this point, the way this looks, I would want to see this break above that and give me a retest. That's what I want to see.
And I mean, and the reason for that is just because there's a very bearish slant. It's like, look, breakout, nothing. Breakout, nothing. And we need
because if it's long, I always like to look at it as like, right, like very hard. Is it long or short?
Yeah,
it's short. This is clearly short. Yeah. When would you? So it's long. You should buy it long. No. You shouldn't buy it long yet. Okay, well next then, when would you buy it long? I'll buy it long if it does this. That's the breakdown.
Yeah, I mean, if we had a bullish signal of some kind. Anything, right?
It would have been a break above that high. That
yeah,
high
if we'd done this, right? And then, you know, then we got something. But look, you could come in with an aggressive support buy, right? Just because it's the floor. Right?
Mm-hmm.
But it's happened twice now, and even though it is a slightly high, it's really struggling in this range. So you could do that. I mean, it's again potential 80%, you know, and it did that in February, in a month essentially. So a support buy here, bang on that line at 2448, 2438. That would have put 80% in just a month. But as Michael said, there is a serious bearish bias here. So I am thinking, if anything, we want to short this range, maybe at the top. I mean, this is a difficult one. I mean, because Bitcoin is bullish, but this isn't moving. So this.
So let me show my charts. I'll give you a little bit of insight for me, and this is what I mean when I say you got to be patient with this. You got to be so patient with all of this stuff, because at the end of the day, if it's not ready, it's not ready. You could be hungry. This is a bad analogy maybe, but you could be hungry, starving, stomach growling. It doesn't matter. If the food's not ready, the food's not ready yet, right? Like, you got to wait until it's actually ready to go. And in this case, it's not ready yet, right? So for me, just coming right into this, and this is a line chart. Oh no, this is so interesting. So it's crypto, so it looks a bit different for me, but I got my template on here so I can still see the same stuff basically, right? So right away, and I mean right away, I can see this. This for me is the 5,200 cross, like I always say. Once I get the 5,200 cross, and I'm gonna just mark this up like I would do any other chart. 5,200 cross for me equals, whoops, didn't mean to put the number lock on. 5,200 cross equals a W off the 200. There's really M's or W's, but in this case, this is going to the upside because the 5,200 cross has happened to the upside. So this is exactly what I'm looking for. Nothing else. I'm not interested in nothing until this setup happens, right? And this is what I mean, Paul, when I say the setup is so cool, because I can automatically tell where I am in the cycle no matter what, nearly, based off these EMAs, right? So remember, this for me is level 1, right? And I'll just put level 1 here. Actually, I'm going to put 1350 cross level. I'm just gonna put L1. I'm gonna start making it so long. I'm gonna just put L1, right? I know I'm in level 1 with my 1350 cross. The 1350 cross has happened back here, right? So I'm really breaking this down. This is a fresh chart. I'm glad they even brought this up to do this. This is kind of cool. Now I can kind of get this on.
I'm not sure. I mean, continue, but I'm not sure that's the same chart. I think that's a different asset. But keep going.
Oh. Well, let's make sure we're on the same chart first. Then I would much rather do that.
Sure. Yeah, I think that. Yeah. You might need to switch it to crypto.
Okay. Let's see.
Yeah, just switch to crypto and then just go with that one. Yeah.
This one?
There you go. Yeah. I made that same mistake. I think just a minute.
Okay, I'm glad you said that, because that was totally a totally different chart.
You said it looked weird. You knew something was off.
Yeah, I'm like, this looks a little funny. I can't tell, but cool.
You can trade anything, Michael. You can trade anything.
Yes. Right. So pretty much same thing, guys. I can see this right away. The very first thing I'm looking at is this 5,200 cross here. Right. So let me just put that here. Now, weirdly enough, I see my TDI is not popping up. So I'm kind of doing this by the seat of my pants right now. But since my TDI is not popping up, but I'm just still going to give you a naked chart idea of what this would be for me. All right. So we got the 5,200 cross. So I know I'm in level 2, right? Same exact thing. Next, what I'm noticing is I can kind of see that my 5,800 is basically about to cross. Now I definitely know I'm in level 2, right? No doubt about it. I'm in level 2 right away. Oh, whoops. Put 50. I'm sorry. I'm tripping. 200, 800 cross. I'm gonna put def L2, right? I definitely know I'm in level 2 from here. Once these two things happen, right? So as I always draw, as I was just drawing here, once I see these things happen, for me, I'm always looking at where am I in this cycle, no matter what. Like, what's going on? Am I long? Am I short? Am I accumulation phase? Do I need to just watch and pay attention? I have no idea. But what does give me a great idea, which is what I like to call like a nice landmark, is when I see these EMAs crossing. I can get a real good understanding of where I am in this whole cycle. Jannie and I always make jokes and say, we feel like an old person sometimes. And where I was asking, where am I? That's the first thing I ask myself is where am I in this cycle? Right? It's the very first thing. Right? 2, I'm looking for some type of pattern, like I always say. Oops. 3, I'm looking for some type of higher time frame confirmation. And then 4, I'm looking for entry signal, right? So right away, I can tell I got my level 1 checked off, right? Because I know where I'm in the cycle. I just know that. So for me, once again, I know I'm in level 2. I got 2 strong indicators telling me that. If I had my TDI here, that would give me 3 and 4 indicators. But hey, that's neither here nor there. Right now, I can tell I'm in level 2 because I have my 50-200 cross and I have my 200-800 about to cross. So I know exactly where I am. The next thing I'm looking for, let me just put this on here too, just to kind of give a little bit more context. Just a bit more context for everybody. And I do this same process every day. I was just saying, I feel like half my day is spent on marking up charts. So I literally,
oh yeah, for sure, for sure,
literally do this all day.
If you had a picture of me in the live stream just 30 minutes before the session, you'll just be like, that's all you'll see.
Yeah, I'm marking up charts. That's what I do. So if you guys ever see me with alerts on my screen and this and that before we jump on, yeah, that was for my last session basically. But automatically I can tell I'm in level 2, right? So level 1, I'm just looking for a nice bounce, but that doesn't really matter because we're past that. We're in level 2. Level 2 is here. Level 2, and I'll just put this over here, I guess. Right. Level 2 is where my M or W's off the 200 occurs, right? I'm just going to put it over here just to be a little bit, what's the name? So for me, I'm actually looking for this to, believe it or not, to come all the way down here to this probably this price point. Now, obviously over time, this is going to slowly go up because it's already kind of in an upper trend, but I'm still going to draw this. Let's put it at a little bit of high here, get a hard mark, right? So I can see right around, what is this? $3.51, about $3.50. Let's make it a whole round number. $3.50. I'm looking for a motion to happen just like this. Price to come down, give me some type of W structure and going long there. And my target would be to the top of where it is, basically over here, right?
Yeah.
And I'm gonna make this green because I'm a stickler for stuff like this. I like to make it all like the same colors, whatever. So I'm gonna make this green, right? This will be my, let's say if I was to, I'm looking for something to happen like kind of off of here. I'll make this blue because it's gonna be neutral. Like this doesn't mean entry or exit or anything. But my entry, hypothetically speaking, if this same pattern was to happen, my entry will be here. I'm going to make my entry green because it's a buy, right? And then I'm going to put my stop loss below this area, right? It's going to be right below this swing, right? So I will make this red. So that's how you know this is my stop loss area, right? So kind of a lot on the charts here. Fly, again, seat of the pants is kind of making this happen, but I will be more interested in a move like this, kind of seeing this, right? Long position, entries here, stop losses here, and my target would be about here. So nice 3-bagger, not bad at all, right? I'll be looking for more something like this on this particular setup. All right, ladies and gentlemen, I'm here 5 days out of the week.
Right. So yeah, I mean, because just to clarify, so this is obviously you're looking at the 1 hour time frame, and that is, I completely agree, solid trade. And on the other chart, we were looking at the daily. So that's the thing. Once you've got the daily chart, you've got the basic idea. You've got to understand. You've got to look in it. So we both of us now, me and Mike, have in our head that it's a pretty bearish chart, right? We know that. We've got that, right?
Yes.
And that can inform what we're doing. So there's always going to be these little opportunities, for sure. And I completely agree with that. I mean,
let's check that out. We got a few more minutes here. Let's check out the daily. What do I see here on the daily?
I'm thinking short the 200 MA.
Oh man. Yeah, this thing is, look how low this is, right? So if I was to do the same exact thing, the very first thing that I see here is this right here.
Yeah.
Oops. For me, this is short. I'm still short. We're below the 200 EMA.
Yeah.
I'll make that short, right? Below 200 EMA. Right? So from here, this is short. This bad boy is short. There's actually no, we should even look back, look to the left. All right, this hasn't fully come in, but let's say, look like we had a 5,200 cross right about here.
Mm-hmm.
Right? Maybe somewhere over there. Right, 5,200 cross. Short. That's all I can really say about this. This thing is definitely short at this point, looking at the daily, since we are trading crypto, right? This is short. And this is short. Another great reason is, right, we had the lowest low point right here. This thing is just now really making a motion, right? Because we had this little interaction here, right? Nice little, we can say resistance.
Yeah.
Right. Resistance, right? However you spell it, I don't even know.
I think you know it.
Okay. I'm not a speller. I'm a math person.
Through with Microsoft Word is a speller.
Right. So I'm looking at this point. This is nice, right? We got this run down. Now we kind of get into that once again. We're looking for some type of structure. I would want to see my stop above here. To be honest, a close below this 13 would be a nice short. Your target could be somewhere down here, right?
Yeah.
Let's say we to get in and close below. You got your stop above here, maybe. And this is just a short-term trade, right? Nothing super long, more short-term than long. But let's say if you did go to this point, a little bit less than 0.83. I think this to at least be at a 1. At least, right? So my target will be down here, whatever that difference is. Minimum 1 for 1. I won't want to touch this if it's not a 1 for 1. Right?
Yeah.
So
that's quite interesting. So you're looking at around that 3658, something like that, 366. So yeah. So do you mind if I just switch back to my chart for a second?
Yeah, of course.
Because I've been paying attention to your thought process. So yeah, so that you're talking right around here, right? Trying to look for a short. Now, for me, obviously we're looking at the daily. You can zoom in, but the daily is going to give us a really good insight. And obviously, where are the sellers? Where are the buyers? Right. So there's buyers here, but not much, right? Even though we support, and that's telling you there's a warning sign, right? TIA isn't responding very well to recoveries from Bitcoin, right? It's really struggling. So this is going to be one of the last. We talked about the money flow and the path to altcoin season last week, and it seems like TIA, based on its current movements in comparison to other cryptos, this is going to be the last to move following bullish gains from Bitcoin and Ethereum and all of that. So it's definitely a short trade. I completely agree. But for me, I would be waiting for a simple 200 MA retest. And then that would be it. But to be honest, I'm not taking this trade. I'm not.
Yeah,
it's too ambiguous. And
it's too unclear.
And people paying attention, that should be your answer the majority of the time, right? It should be your answer. Don't be the one which is like, oh yeah, short here, but look, it's a mess. We got resistance line here. a breakout above this resistance line, flipping it to support just to run into more sellers. I mean, how do you trade that, right? I mean,
Right.
So we've looked at TIA. It's a no trade, but we could then maybe put it to one side. I mean, your trading setup, I like, right? That's a good intraday short-term trade for sure. So if you want anything to trade with TIA, listen to Mike for sure. Right? But if you're but there's better options, as we've established. There's better trade. Oh, hello. This is going. Move is going. See, this is what we want to see, right? Higher high, right? And now this retest, more buyers are going to come in. That's good. That's great. But look at this compared to this. We got nothing. It's giving us nothing. So, you know, it's leave it, move on. Maybe think about what you want to see to enter a trade. But TIA is not giving us much. I'm really impressed that you managed to get something out of it, Mike, to be honest. So well done for that. Very
technical
good.
analysis. TA is where it's at, right? Like just that.
I mean, yeah, we could go deeper, right? We could go deeper on that, but I don't. Like we said about 20 minutes ago, there's no point. I've seen all I need to see.
Yeah. And at the end of the day, it kind of depends on, once again, like, are you trying to swing this, or are you trying to day trade it? If you're trying to day trade it, you know, maybe my first initial markup would be the right way to go. Simple targets, that's it. If you're trying to swing this, definitely looking at the higher time frame, which is the daily, right? Yeah. And then swing it from there. The daily is short all day long. There's multiple confluences there, right? And I didn't even have my TDI to tell me that.
I need it. Yeah, so more conversations, I think, like this. Now we've got some more assets.
Yeah. And it's like they putting us on that you and I have a bit more sessions together. So that was super cool. I love like the traders pop quiz for you and I, just to kind of see what's really going on. And obviously I'm more of a day trader to trade in a 1 hour chart, but I can always kick it up to the 4 hour daily, you know, and just to kind of give a broader scope of what that bias would be. So super cool, super dope for you to even pull that up and make that happen, Paul.
Yeah. Well, you know, when you run out of time, you know, you don't do it. But there's a question. Do you want to get this one? I don't know. I mean, what to expect from the dollar this week?
From the dollar this week, let's see. DXY. Okay, let's pull it up really quick. Let's see.
Andre is asking, I think. Andre.
One sec. Cool. So let me share my screen really quick. Yeah, we still got a few minutes. I can run through it super quick for you. DXY. Okay. Cool. I hope this is the chart you're referring to. Oh, this is on the. You said this week. Let's do the 4 hour chart for this week. Yeah, looking a little interesting to say the least. Not sure what's going on here. What in the world is this?
Yeah, what is it?
Okay. Whoa. So let's move this out to the hourly chart. All right. Yeah. It's a great question. This looks very, very, very ambiguous here, to say the least. I don't know. I can't quite tell. If we're talking about for the week, which is only 3 days left, 1, 2, 3, yeah, 3 days left in the week, we can't put this on a 4 hour chart. This looks very in the middle for me. I will say that when I look at this right away, I do got my fresh 1350 cross. So it looks like I would be more long than short. I also have on my TDI, as you can see, since if we were to look back all the way from here, this date basically is when the dollar kind of went below on the market baseline for me. Right, so the date is this February 9th. Right, I'll make this red really quick, keep everything congruent. Right, so if you look at this right here is where the market baseline, the yellow line, went below the static. And as you see, it kind of came up and touched it here, right? But kind of just dipped right back below it. So we can count this, I guess, because technically it did go above it. We'll put this here. Right, so two main dates, February 9th and March the 3rd. But ever since March 3rd, this thing has kind of dropped really back on off. But since then, it's been making a constant uptrend, right? And then this is kind of separate, but if we were to go and look at the S&P, which is a direct correlation, really, just to kind of see what's going on. So it's making a small uptrend, right? Like from the lowest all the way down at -6, right? Around -6, and it's kind of trending up here. So with that being said, just to kind of come back on over here, we're just now getting a slight recovery of all of this. I won't say this is long or short just yet, because this could easily, with this 1350 cross here, could easily just do a swoop, bounce, and drop right back on down. It could easily do that. Or it could do the opposite, right? Which would be, we got this 1350 cross. It could come up here, bounce, and go long, right? I hate to say it, but we're in no man's land. We're in no man's land. I haven't
got any alcohol. I mean, I would treat that as a range trade with the upper part of the range not having been visited yet. I would look at it, and maybe that moving average is probably that determined. That's how I would look at it. It's not anywhere to trade just yet, but if we get a bit higher, get a bit of structure, we've got something we could range trade. I mean, that's, I think, the best I can say.
Yeah, it's too close. I have no idea what this is right now. It's right in the middle. You kind of can't really tell. Sorry about that, Andre. Let's make sure you show up tomorrow, day by day, and we'll keep going over this. Just ask us that same question tomorrow. We have a better idea.
yeah, sure. Well, thanks for your help, Michael. Great insights. Really appreciate it.
Of course, guys.
And hopefully see you later in the week.
Absolutely. I'm sure I will. Well, you guys take care. Be safe out there now.
Take care, everyone. Thanks, Michael.
All right.
Hello, Howard. How are you?
I'm great. How are you, Sam?
Good. Thanks for asking. I think we are waiting for one more coach, new coach, Nandan. So we'll give him a couple of minutes. This is his first time, so naturally, maybe he's trying to figure out how to get into the studio. It can be a bit tricky at first.
Yeah. You're making me feel like an old timer now.
OG, you are. That's what the kids would call it these days. How's your trading day been?
Yeah, not bad actually. On cable sterling dollar, I basically bought an upside breakout and grabbed I think 30 pips or so.
Oh, nice.
Let me just I'll share the screen just to
yeah, absolutely.
show you the 1 second. Okay. Through now. Okay. So obviously we had that volatile day yesterday where it was up, it was down, and it seems to have held this morning yesterday's lows, and it set up a bit of a resistance level here around 129.30 odd, and it started to break through. I literally got in on the breakout early this morning. I had my the plan was actually to take partial profits at 29.60, which I did, and then to run it until I think it was 29.90 or so. But it seems to have slowed down momentum wise, or at least some of the dollar crosses have slowed down a little bit. It might be breaking up now, but it didn't run it didn't run straight away kind of thing. So I basically cash that in, and I'm gonna wait for tomorrow for another crack at it. Maybe it settles. I think this yesterday's high is quite a stiff resistance point here, 29.74. So I'd be quite surprised if it really motors on through that without any real impetus going into the end of the session. So maybe get another chance to have a crack at it tomorrow.
Yeah. No, hopefully. That's really nice. That's a really nice trade. I mean, 30 pips in a day. Can't complain, can you?
No, not bad. Not bad at all. I did a similar thing with Euro, but I think I ended up losing 5 pips or so. It didn't really do the same kind of follow through as cable did. A bit of a quiet one I think today. It's not really breaking out the ranges or anything yet.
Yeah, we had what turns out to be a range now in the S&P 500. I did have a short bias. I did short the market. Trade went all right. Got out pretty much at the right spot. I was expecting it to drop further, but where I got out happened to be exactly where it reversed, and now we're just kind of bouncing up and down in a range. I will share my screen and.
So it sounds like pinpoint precision there.
Yeah, I would say I would take the credit, but to be honest, that was a bit of luck. Was sprinkled in there. So I can't take all the credit, sadly. Let me just do entire screen. Oops. That didn't work. My bad. I don't know if it's my laptop or the internet, but something today has been ridiculously slow. Let's try that again. Hey, that's working. Okay. There we go. All right, lovely. Should be able to see it. Yeah. So I think yesterday on the session we were around here where it started pushing down from this resistance area, and I said the next day or two I'm going to have a bearish bias, and I thought what would happen would be it pushes off here, comes down, and then floods down. Didn't really get that. I mean, we kind of got it. It pushed down, bounced off, and then it wanted to go down, but this was, during the Asian session, pre-market as well.
Yeah.
But just, around, how many hours is that? I can't do the math in my head, but quite a few hours before the open, we had this really nice push up. It didn't break the area. I mean, the area is all the way at the top here. So until we get past that area, I'm still not looking to be buying the market. So we're still very much in bear territory, so to speak. But as the market opened, I did get this short position down to here. I did record it as well, so I'll be showing the viewers that in a moment. But I pretty much, sorry, my charts are very messy, so it's hard to actually see what I'm highlighting. But in fact, if I used a pen tool, I could probably show it a bit better. So I got in around, okay, yes, again, my live account, I got in around here. On the trading view account where I had to screen record, I got in a little bit late. I got in about here, I think, and got out pretty much here
Nice.
by that black line. So it turned out to be a pretty decent trade. And then after that, I just logged off, got my win, and that was it. But it has pushed up, and now it's looking like we're just ranging between these areas here.
Yeah.
I'm still have a bearish bias. I still think in the next day or two we are going to be going a bit lower. That is ultimately at least down to this area here. And then maybe potentially down to here, but it really depends. I mean, but if I had to pick a side for the next day or two, I think we're going down a bit more. I think what we're seeing is just buyers trying to keep control of the market, but the sellers are having actually an impact. It's the first day the sellers have had quite an impact in recent times. I mean, during US Open and during the actual US session, but in we've kind of just been very bullish, and then we had a bit of a sell-off, but that was towards the end of the day. That was more just people getting out the market, I would say. And today has been the first day where, although we have technically created a new high, it's barely, considering that was yesterday's high, it really isn't that much. So we haven't really been able to push the market that much higher, and the sellers have been pretty good at defending this area and keep pushing the buyers down. So we are in a range. How long this range will last, impossible to tell. I really don't know, but eventually it will break, and I do think we'll be going a bit lower. So that's pretty much it from my side. I can show let me get the video up. What date is it? It's 25th today. I saved it as 25. Here we go. And then if I add to stage, we should be able to see. Here we go. Right. So same kind of thing. This is market open, pretty much. Sorry, this candle's market open. The candle we're seeing now. And although there wasn't that much heavy volume, we were already at that area of resistance where I was very doubtful buyers will be able to push up higher. And I was seeing more sell pressure on the depth of market, generally speaking. More people were eager to sell. And there was a pretty good sell-off, although it was just before market open. We did have a pretty good sell-off on the candle before. So I was happy to enter a position, and I think I'm just setting my stop loss and take profits there. And then I'm just watching before I pile on any more orders. I kind of just wanted to watch, and I think it was around here where I started seeing more heavy selling come in, and the sellers have been pretty effective in pushing the market down already. We're seeing buyers are struggling every time they get above these kind of areas. They're really struggling, and you can see it in the candle shape already, like the long wick, small body. We're starting to see that form. So I was happy to basically, I wouldn't say go all in, but go in and just let it play out. And then we had this beautiful move, and I hope it just flooded. I mean, I think that was it there, actually. Again, we just saw this huge push down out of nowhere. Let me go a bit back. I think it was here or a bit later. There was just one sudden move where we just shot down. That was good, but that wasn't the one I was thinking of. There was one that happened, and it was just lovely. I'm trying to find it. I keep switching the charts all the time. I don't think it was a bit earlier than that. I'll try and find it again, but essentially we just had this lovely move down, and then I went into the 1 minute and you just saw this institutional activity. And I'd love to show that if I can find. Do I go to the 1 minute? I do go to the 1 minute here. Is this it? No, this wasn't it. This wasn't it yet. Because I remember seeing clear as day this institutional activity. And that really gave me a bit more confidence again to keep holding the trade. Although we did suffer a little bit of a retracement. It wasn't anything too major. I think that could have been it. Was that the move? Just double check. Yeah, there we go. So from 1 second to the other, we're going, from here all the way down to here. And you got to remember that the footprint chart is deceiving. It doesn't look like it's moved much, but believe me, it moves quite a bit. When you see it in candlesticks, you're like, whoa. But it's looking pretty, and then boom, just jumps. And I was like, wow, okay. That was lovely to see. And then if I go on to the 1 minute, which I did do at some point, you could see there it is. There it is. Just the orders are all identical. If one wants to zoom in here we go. Look at that.
129, 129.
Yeah, just all the same. Someone just breaking up their order into loads of different loads of positions. So gave me a bit more confidence to hold it, even though we were suffering this little bit of a retracement. I was pretty confident that we're going to keep pushing down for a bit more, which we did, a little bit more, but then we did kind of just start topping out around here. It was really struggling to break. And I gave it many times, and it just wasn't wanting to do it, which was really just a bit annoying. And I knew it was a gap in volume, and I thought maybe it can break it. It looks like every time it was about to break it, and I thought, oh, here we go. just break that area, and I'll be happy. Because then I know we're going to my take profit, and you could just see like the sellers were coming in quite strong, but they were just getting absorbed very quickly. Just wasn't happening. It just wasn't happening. I think I gave it a good 5-10 minutes maybe, and you can see the numbers are getting big on the sell side, but they're just getting absorbed. And every time you're seeing big contracts come in, the market's not pushing down anymore. It's just struggling. It keeps jumping up every time.
So but the buyers are coming in, kind of thing.
Yeah, exactly. And that's when I thought, nah, I'd rather just secure my profit here, and I pretty much got out. Again, we almost 1,000 contracts. We're still struggling. It's just not pushing down. And I thought, okay, that's it. And I got out. So that was pretty much it for my trading day. I did get a better entry on my live account. Annoyingly, well, not annoyingly, that's a good thing, actually. I don't know. Pretend that's a bad thing. I don't know if you could see it, but it was a much better entry in terms of where I actually entered compared to what I showed in the here on the recorded one. But yeah, I'm pretty happy with the trade at the end of the day. Didn't get down to the take profit, but I'm happy that I exited at the right. Oh, Nandan, you're here. Sorry, I didn't even notice.
Hello.
No, it's all good. Yeah, I had some trouble getting into the room, but hopefully you guys can hear me and see me all right.
Yeah.
Yeah.
Nice.
Absolutely. Sorry about that. I was
Nice.
looking at my screen and then I can't see.
No, it's all good.
The actual StreamYard. How are you?
I'm doing all right. I'm excited to finally get started. I had all this. Well, there isn't really much to say. You know, this market isn't really the best, as we all can see. You know, a lot of mixed signals, a lot of consolidation happening in the market. So, you know, if I pull up my screen here, hopefully I get this right.
And by the way, Nandan, this is Howard, another trading coach. Howard,
yeah,
Nandi.
nice to meet you, Howard.
Do you want to be called
Nice
Nandi
to
or
meet you,
Nandan?
Nandi. You can call me Nandi.
No
Yep.
problem. No problem. Awesome.
All right, let me go ahead and okay, you should see a spreadsheet up in front of you guys.
Yes.
Okay, so this spreadsheet is based on the 4-hour daily and the weekly time frame, and it's based on all the 28 currency pairs that I trade, and they're based on the US dollar, the Swiss, the euro, Japanese yen, pound, Aussie, CAD, New Zealand. So it's a mouthful, but overall, you can see there's a whole bunch of no trends in the market. You know, there's very little strength and weakness, which is the very core of what I look at when I'm trying to find a pair to trade. You know, I got to see, is there, you know, if, for example, the euro USD, you know, what's the euro doing, and then what's the dollar doing? Is there any strength or weakness in either currency, and ultimately who's driving the movement? So when I'm trading, I got two modes of operation. The first one is analysis mode. You know, what's going on in the larger time frames. So looking at the US dollar, we have these little boxes here. So if the US dollar was to be strong, it's got to be oriented in this sort of fashion. And if it's weak, it's got to be oriented in this sort of fashion. And that goes for every other currency. Just depends on which currency is the base and which is the cross currency. But in this case, the Euro USD, you know, the weekly is in an uptrend, the daily is in a no trend, and the 4 hours in the downtrend. So that gets automatically populated into this little section here on the right. And as you can see, there's nothing really going on with the US dollar. Same thing with the Swissy. The euro does have some slight weakness on the 4 hour, you know, the smaller time frames, but again, the daily and the weekly are pretty much mixed or consolidating. I didn't really see much on the spreadsheet. We'll get into the charts, but you know, moving from the euro, you know, we established some weakness, but it's overall largely mixed on the larger time frames.
Yeah.
The yen, same thing with the yen. There's nothing really going on with the yen. Pound, pound does have some long-term strength. You know, there's some slight long-term strength, but as you can see on the daily, the strength has kind of come out, right? There's only 2 out of 7 pairs that are, you know, pointing in an uptrend, which to me, I like to think of the market in terms of probabilities. And
Yeah.
there's 7 pairs in each currency group that I trade, right? And I like to see a minimum of 5 out of 7 going the same direction. You know, I need some sort of consistency to tell me that this is a legit actual assumption being made on the currency or pair. So pound does have some long-term strength in it. The lower time frames like the daily and the 4 hour are pretty much mixed. You know, the strength has kind of come out and it's consolidating. You know, I sound like a broken record here, but the entire market is just kind of going sideways. You know, same thing with the Aussie, same thing with the Canadian dollar, and same thing with the New Zealand. So this is a market which it's not really that great of a market. You know, it's a it's a market where you really got to manage your position sizes accordingly, and you got to be comfortable with risking less. You got to be able to exit a trade much faster, normally than you normally would. You know, compared to a trending market or a trending pair, which you'd want to hold on for longer. You know, maybe a couple days or maybe a week or longer. It just depends. But yeah. So yeah, you were going to say something.
You got to lower your expectations, don't you, in a range market like this? You can't expect the same, like you said, in a trending market.
Yeah,
That's
absolutely.
when,
yeah, you can't.
Big moves.
Right, you can't be in a trade for too long. I mean, you can be, but you'll quickly find out you're going to get taken out. So
yeah,
be willing to take profit sooner. Be willing to scale out of your position size sooner, and risk a lot less. You know, I think that's the money saving tip for longevity in the trading game, is to know when to scale back on your position. And if the market's not providing you any opportunity, then you know, certainly risk less, or just sit on your hands and don't trade at all and wait for a better setup to happen.
absolutely. And can I ask, Nandi,
Yeah.
this heat map you got, so do you manually like analyze a pair and then put how are you doing this, if that makes sense?
Yeah, of course, of course. So this spreadsheet is just for the larger time frame analysis. It's where I do my multiple time frame analysis. I get a generalized picture on what's going on in the market. So right now we can tell it's pretty it's consolidating and it's choppy, right? The market's just inside of ranges. Now, the heat map, let me share the heat map screen. Give me 1 second here.
No problem.
Okay, hopefully you can see the heat map now.
Yes.
Okay, what the heat map is
Sorry, 1 second. There we go.
Yeah, just come through.
okay, good. All right, what the heat map is, it's an exact representation of what has happened in the market since the a couple hours before the main trading session. So you guys know of the London session, the New York session. I'd like to just make it simple and just call it the main session. It's a 5-hour period of time, 4 hours before the New York Stock Exchange opens. So for me, it's 6:30 in the morning, and about 1 hour after the stock exchange opens. So that period of time, that's like where 95% of my trades are taken. I don't really like to stay in front of the computer much longer than that, because I just found in my personal trading experience, the moves become less stable, and you don't really get the same volatility that you would in that 5-hour period of time. You have everything open, everything is at its max trading volume at that point, unless you have news.
Yeah.
But yeah, so if I've analyzed a pair and I like it and I want to enter into that trade, that's where this tool comes in. That's the Forex heat map. And if I'm at a significant point of resistance or support on the larger time frames and I'm looking for a trend trade or just a momentum based trade, I want to make sure I have money on my side, right? Where is the market moving? This is kind of that saying where, don't tell the market what to do, follow what the market is showing you. So this has shown me how much a pair has moved in terms of percentages. So
Mhm.
each percentage is different, right? A 50% move on the dollar yen is much different than a 50% move on the pound New Zealand, right? They're quoted differently. A pound New Zealand, I believe, is quoted at like 2.09 or something like that. A 50% move on the pound New Zealand is 100 pips versus the dollar yen. Let's see what the dollar yen is quoted at. Dollar yen's quoted at 149. So a 50% move on that, it's half of 150. That
Yeah.
it's based on how much that pair has moved since the main session, a little bit before the main session, just so I can get a fresh set of readings. And this is all done by itself. I'm not really doing anything with the heat map, but what I am doing manually is analyzing the market and seeing where the money is moving and what trends are available. This is just a confirmation I'm using with everything else, right?
Right.
This is just if I can share my screen with you here,
Please. Yeah.
I don't really have many indicators on. It's just a okay. Hopefully you can see my screen now.
Give it 2 seconds. Yep.
Here we go.
Okay, so I'm gonna zoom in on the Euro USD. So as you can see, I got a simple chart system going here. I got 2 indicators that I use. These are exponential moving averages. They're pretty much my trend indicators. I use a 5 exponential moving average on the green line, and then a 12 exponential moving average on the red line, and that pretty much just tells me the trend. So currently, the Euro USD on the daily time frame is in a no trend. It's pointing sideways, right? It hasn't really crossed to the downside yet, but
Yeah.
the weekly is pointing up, right? So this shows that there's some long-term strength in the market still. But if you go into the daily, well, you see we're in this humongous range right here. It's about 180 pips wide, and I am personally waiting for a break of 1.095 to even consider trading this pair. If anything else happens, I'm really not interested into it, and I'm just moving on. But the entire market is like this. So
Yeah.
so
Tell me about it.
it really affects everything, you know. I mean,
Yeah, sorry to interrupt. I've got to say, it's a
yeah,
bit like if you go to that period, October 24, it looks like that kind of period, but turned upside down to me.
yeah.
Like an upside down kind of, like, little correction against the previous trend, and then it goes again.
Yeah, of course.
That's how I'm looking at it. But
Yeah. And you know, since I didn't really have a specific currency to look at, I just had a couple of pairs that I thought were interesting. You know, I think the market needs a few days, or you know, we do have some interesting news announcements coming up too. So we'll see how those shake up the markets. But just for the sake of having something to talk about, the pound Aussie. I have three pairs in my trading plan: the pound Aussie, Euro pound, and pound US dollar. I thought those were somewhat interesting. So taking a look at the pound Aussie on the weekly time frame, it's in a pretty strong uptrend. You know, the trend indicators are pointing completely up. And if I move to the daily time frame, trend indicators are still moving up, but it's, in my opinion, this thing is consolidating upwards. There isn't really as much juice as there was in this initial move to the upside. It's kind of
Yeah.
spiking and making higher highs and higher lows at this point. So um, you know, moving to the 4 hour, this looks disgusting. this this looks hideous. You know, I don't like this chart at all. This 4 hour chart, I can see it spiking. I can see it making very unstable moves. You know, I like to be in a trade for a couple days, and if I was to zoom all the way out, where would my price target be? So if I was to get into a trade on this pound Aussie, one, I try to see on my spreadsheet analysis that I showed you earlier if the pound is strengthening or the Aussie dollar is weakening or both. That's the ideal situation where you have strength versus weakness. And when you have that, um, on the larger time frames, you know, consistently with all seven pairs on the pound and all seven pairs on the Aussie, and you put them together, well, you're going to get what I like to call a slingshot. You know, that's when a pair just keeps going up and it doesn't stop. But right now we don't have that, right? So if I've analyzed a pair and I've determined that, hey, you know what, this pair is interesting and I'd like to put this in my trading plan, now for the phase one is complete, right? So tomorrow when I'm in my main trading session, I'm going to be looking for a price alert to be hit, which is going to be at 2.065. And once that price alert hits, I'm going to be going back to my notes, or my initial analysis notes of what did the market tell me was happening. And then if everything was good and I thought, you know, the market was trending and there's not a lot of choppiness and consolidation going on, then I would go to my heat map tool to confirm, hey, is money going with my direction, or is this just a fake out? You know, that heat map tool really does help against heat maps because it shows you where's majority of the movement happening in the markets, right?
Mm.
It's just a all that heat map is a bar chart just put sideways and into percentage form. And um, yeah, so with the current market conditions, let's say the pound Aussie alert did hit, right, in the
Yeah.
main session, and carrying on with the same market analysis that I have right now, which is there's not a lot going on, the market's dead, right? Uh, there's a there's a saying that I've heard is if the market is dead, your next entry is likely to be dead. You know what I mean? It's it's you really got to have strong momentum by your side if you want
Sure.
to enter a trade or breakout of a critical support or resistance.
Yeah.
And as of right now, I don't really have any of that, so I'm kind of just sitting on my hands and you know, waiting for this pair to break through. But if the conditions were perfect and I had heat map confirmation on my side, I would be entering this trade for a pretty long period of time. You know, I'd definitely be wary of this little spike that's happened here at 2.08 area, 2.082, something like somewhere around that area. I'd be monitoring this pair, and I'd be okay with scaling out position some of my position if I was to get in and letting the rest ride. You know, ride the trend all the way up to potentially even 2.16. You know, these are levels we saw in 2015, and It's a long time ago. So this would be more of a position style trade unless there's extreme volatility and we get strong moves. That'd be great. But you know, just go with
Yeah.
just going based off what the market's telling me. I don't really see much on happening on the smaller time frames. You know, especially with a chart that looks like this. You know, on the 4 hour, it's showing me it's consolidating.
Yeah.
So when the majority of the market is like this, even trending pairs that are trending can be significantly impacted. Uh,
Mm,
you know, we have majority of the market, more than half of the pairs I trade are currently going sideways.
mm,
So that will certainly impact trades that are in pairs that are in long-term trends. It'll certainly impact them. You know, you'll get less stable moves. You'll get more bouncing and whipsaws and all that stuff, all that good stuff. But oh, just had a price alert hit right now. Let me turn that off. But
So you would use, so say hypothetically now the market isn't ranging, everything's looking good. Let's
Yeah.
say the pound across all pairs is really strong, and the heat map confirms it. You would just enter,
Yeah.
or is there like a specific
yeah. So
requirement for you to enter, if that makes sense? Besides that,
yeah, this is where you enter into the entry mode. You know, the first phase analysis was done. Now entry mode is happening. So with the pound, what pair did you mention? The pound Aussie?
anyone, let's say a pound,
Anyone?
yeah,
Okay.
yeah,
Well, yeah. The reason I asked was because the pound Aussie, for example, is a very volatile pair. You know, any pound pair is a very volatile pair. But just looking at how it's quoted, it's at 2.05. So 1% move on the pound Aussie is 200 pips, 205 pips, right? You move the decimal point over 2 times. Um, so it's a 205 pip move, which is a massive move. You get 200 pips on the day, man. You made your whole year's worth. So it's a significant move, and with higher volatile pairs like this, I like to have an initial stop that's wider. So I'm thinking around 35 to 40 pips of a stop loss. But when I enter a trade, it does not mean that I'm willing to let my stop loss be hit, right?
yeah,
I'm into a trade and I'm out extremely quick, if the momentum is not by my side. So the way this works is I get a price alert. I look at the heat map. I got confirmation. I'm looking to pull the trigger. Everything looks great. I enter into a trade. And at this point, I am looking at the pair to go into profit immediately. Because I'm trading with momentum. If
right,
the pair is not going into profit immediately, momentum's not on my side at that point. You know, I could be wrong, and believe me, I have been wrong before, but at that point, you kind of just have to take it how it is and take your loss and move forward to the next opportunity. But
yeah,
if I do enter, I want it to go into profit immediately. I have a stop loss of about 35 to 40 pips, and that's not because I'm trying to lose 35 to 40 pips. It's just in case of extreme volatility. A news announcement happens and it goes the other way very quickly before I could exit out the position.
mm,
But yeah, I'm looking to get into profit immediately. Within about 30 minutes, I want it to go into profit. And if it stalls out completely and it's not going anywhere, let's say I'm at plus 10, minus 10 pip range. I'm kind of just stuck in that. I'm not really going into profit. It's not really reversing it. It's just consolidating at that point. Well,
yeah,
at that point, you got to exit. Momentum didn't really carry your trade into strong positive pips. So at that point, the best thing to do is exit, because you'd rather wish you were in the market when you're out rather than being in the market wishing you were out. You know what I mean?
yeah,
It's a very
Oh yeah.
you take your licks and just move forward. The market got the best of
absolutely.
you, and just move forward. And once you're in to a strong positive trade, let's say I get into the pound Aussie right now, and it goes into 30 pips immediately, right? 30 pips can happen within 5 minutes because this pair is very volatile. What I like to do is I like to move my stop loss to break even, and at that point I can determine, hey, is this a pair I want to hold on to long term, or is this a trade that I want to take partial profit or exit completely? In this sort of market, if I was to enter the pound Aussie, it would be strictly based off of momentum. There's no larger time frame support. There's no larger trend support, and the market's choppy. So I have all that information telling me, hey, I need to scale back on my position size, and I would be mainly trading on the 15-minute, the 5-minute, the 30-minute, whatever time frame gives me the best picture. It's not like I'm using the 15-minute every time. I'm not using the 5-minute every time. It's whatever is giving me the best picture of what's happening. Sometimes I can be way too zoomed in, and I need to kind of zoom out and see, okay, I get a better understanding of what's going on. Or sometimes I'm on like the 15-minute chart, and I'm saying, hey man, I need to zoom in and really see what's going on here, because there's cycles, there's lower lows, lower highs, cycles being made. So it truly depends on a trade to trade basis on which time frame I'm using for entry. But
Yeah.
the procedures are the same. Smaller time frames are used for entries into the larger time frames. And
Yeah.
if there's no larger time frame support, well, then I'm going to exit that trade, as soon as the intraday momentum starts to come out and we start to consolidate.
Interesting. Yeah, really interesting strategy. So you're not using like what most people would use in order to define the market. You actually, and correct me if I'm wrong again, sorry, you're using literally, like if you're looking to enter on the pound, it can't just be the pound US dollar that's showing strength. It's got to be pound yen, pound, like across all pairs, right?
Right. You got to have some sort of consistency against all the pound pairs, because again, the pound Aussie is not just the pound Aussie. It's the pound and the Aussie. You got to take the pound, put it 5 miles on the left, take the Aussie, put it 5 miles on the right. What's going on with the pound? What's going on with the Aussie? And then you can make your decision based on that. And that's not your only decision. You have support and resistance levels you got to watch out for. You got the overall market condition you're going to watch out for, and if there's any pending news coming in the market. It's not just one thing on the checklist that I'm really weighing on, but it's more of a plethora of things that I like to have backing my decision to enter a trade. I don't really like to enter a trade and just off of a whim. I need to have concrete proof of like, okay, this is a trade I'm going to enter. I better take it seriously and it better go into profit immediately, or else I'm out.
Yeah, absolutely. That's really, really interesting. And you actually use the type of charts you're looking at now. I don't even know what they're called again. You don't use candlesticks. You use
nope.
Wow.
I never found it necessary. I can decipher the charts much easier with this. If I can put it to candlestick charts. The colors are a little ugly, but yeah, I mean,
it depends on the broker, doesn't it? Sometimes.
Yeah. I mean, it depends on the broker. I just found that bar charts are just so much easier to look at and analyze. You can see clear resistance areas, support areas. I think it's just more personal preference at that point. But
no. I mean, whatever works for you. I mean,
yeah.
You're just the first person I've actually met who genuinely enjoys trading like the bar chart rather than So to me that was just that's pretty cool.
Yeah, awesome. It's definitely an interesting way to look at it, but it works.
I mean, you're seeing the same information at the end of the day. It's just like you said, it's preference, right? Yeah, that's really awesome. Really awesome.
Right.
We do have a few comments. A user asks, how do I adjust my strategy for different market conditions? I mean, it depends on your strategy, really.
Yeah.
I mean, look, there's two main market conditions. You got a trending market or a ranging market, and I think Nandi, you mentioned this just earlier, right? Lower your expectations in the ranging market. Be prepared to, lower your risk and get out at. Don't expect the market to start trending if it's in a clear range, right? Until it actually starts trending, and not just like a little breakout. I'm talking a proper trend. Then you could start looking at, adjusting it for bigger profits. But while it's ranging, treat it as a ranging market. And I mean, a ranging market is relatively easy to trade. I think what most people struggle with is they try to preemptively guess a ranging market. Do you know what I mean? They might go sideways for a little bit and they're like, oh, we're in a range. And then they're trading it as if it's a ranging market. And then when really it was just like a small break, a little break of accumulation before it continues. So again, you can use things like volume to identify where more likely there will be a range, anywhere where there's heavy volume, right? With tools like the volume profile tool, if you're near really heavy volume, it's more likely you're going to enter a range, just because historically speaking, that is where traders like to transact, and a lot of buying and selling were happening in that area, which is going to cause more of a ranging kind of sideways market, right? So there are ways you can look at it, but yeah, I don't know if anyone wants to add anything to that.
Yeah, I mean, the same thing you said. Scale back on your position size. Understand how your trading system works in different market conditions. Obviously, you got the trending conditions, you got the choppy and consolidation periods. Understand what period of time your system works in, and if your system works better in trending scenarios than consolidations and choppy markets, well, I think you answered your own question. You got to scale back. You got to be willing to sit on your hands and be patient. Wait for the opportunity to be presented to you, and honestly, shut the computer off if there's no opportunity, because you don't need unnecessary drama. You don't need it. Just don't get yourself into that.
Absolutely.
I'd say just to add something. Rather than, well, you've got a choice, I guess. You can have a strategy which you're happy with and you're comfortable with and it works in certain market conditions, or you can have more than one strategy that works in different market conditions. So maybe you want something that works well in a range bound market. You might want to be looking at overbought, oversold kind of oscillators. In a trending market, obviously you've got all the trend indicators and you've got support and resistance and that kind of thing. So I guess it depends on whether you want to trade in every kind of market regime.
Yeah. And if I can if you see the chart on my screen,
if you don't, then obviously you are.
Yeah. Sorry, you cut off there, Howard. Do you want to add anything else to that?
Yeah, no, that's what I'm trying to say is that either you have more than one strategy for different regimes, or you have one strategy and you're a bit more kind of realistic when it comes to a regime which is not suitable for your strategy.
Yeah.
Right. Yeah. And I just wanted to share the chart that I'm currently looking at is the euro pound. So in that spreadsheet analysis, there was some 4-hour weakness on the euro. It wasn't dominant, but it's noticeable. You got 5 out of 7 euro pairs going weak, and they're in downtrends, which means that the euro is weak, slightly weak. So the best pair at that point would potentially be the euro pound. And if I look at the euro pound right now, I'm not trading this pair because it's way past the main session for me. But just the way it's kind of set up, it's oscillating, right? How we were just talking about this is a pair that is oscillating. You can see that this is a huge oscillation of 200 pips. Ultimately you can even come down to 220 pips. But in this range, if I was to take a sell on this pair and I had, I understand what the market conditions are like, I'm not going in with a full scale position. I'm adopting a more intraday style of trading where I'm going to be trading off of the smaller time frames, and I'm going to be expecting lower profits. This pair, if I'm looking at it on the 4-hour, this seems like a very smooth chart. If I see how many pips of potential we have to the lows, we got about 80 pips of potential till I would say we hit a significant level of support here. And since the market conditions are the way they are right now, I wouldn't be expecting this pair to come all the way down to here. If I had true momentum by my side and I was in the main trading session and I had I had momentum on my side, I would probably be expecting to get 20, 30 pips, maybe 40. and get out quickly, you know, and I'd be going in with a reduced lot size. I mean, I'm probably scaling back 75 to 80% of my normal position size if I was to enter on this pair. But I think a pair that would not be like the euro pound would be the pound US dollar. You know, if I look at this pair on the larger time frames, like the weekly time frame, the weekly looks great on this. It's in a very strong uptrend. It's still got room to move. You know, we got some resistance. If I zoom in on the daily chart, we got some resistance that it's currently stuck in, right? And I think if it is able to break its current spot at 1.30, we still got some resistance about, you know, up to 30 pips away, but ultimately it can certainly come back, you know, up 400 pips, you know, 1.34. I think it can certainly take that move all the way up to the top, but it really just depends on how the market conditions change. But this is a pair, you know, if you had perfect market conditions and everything was solid in your favor and you entered in on this breakout point, um, you'd want to make sure you get your stop to break even, you're in positive pips immediately. But this is a pair you would want to let your position ride out in. You know, you don't want to close it too early because you're just missing out on extra potential pips. So learning how to manage your position sizes, learning how to manage your open positions when the market conditions change is very paramount. And that's how you can become more efficient with capturing pips versus just, you know, having pips and then losing them, giving them right back. But yeah, that's the overall yeah. Huh. Okay, I think I am the only one in the room right now.
Yeah, I'm in now, I think.
Oh, okay. I was like, what happened? Everyone just disappeared.
Bit of a technical issue there. I thought it was my side, but obviously not.
Yeah, yeah. All right. Yeah, we'll just wait until Sam comes back. Seems to be glitching out again. I can still see you moving though, Howard.
Yeah. I'm moving back and forth.
Yeah.
Maybe continue. I think because we're live, so maybe what you were saying before.
I don't even know where I left off.
I think the question we're talking about sterling dollar cable.
Right.
So would a pullback to 128 be healthy for cable to continue rising?
Hold on, give me 1 second. Let me try to share my screen with you again. Okay. So you were saying a pullback. Let's see what the comment said. Pullback to 128 be healthy for the pound. Well, let's take a look. So 128. You know, if it was to pull back to 128 and then it started to trend up again, I'd want to make sure that the range was large enough and smooth enough to be able to capture, you know, 100 pips at minimum. You know, when I'm looking to enter into a trade, I'd want the minimum next level of resistance or support, depending on the pair, to be 100 pips and up to 200 pips for higher volatile pairs like the pound Aussie. A minimum of 200 pips for that pair to set a trading plan for it and to really hold on to it long term. But I mean, would a pullback be healthy? It really depends. I mean, if it pulls back, if with this chart all the way back to 128, I'm not gonna buy it really because it's still got to go through all this junk that it's accumulated. At that point, I'd really want to see it consolidate for a longer period of time, and depending on how powerful that pullback was, I'd want to see a lot of room to move and a smooth chart. This 4-hour chart is not really smooth. It's consolidating. It's going sideways completely. So a pullback, they always help. If you trade off of a pullback, it's always nice to have that. But make sure you have you've cleared all the junk. If we pull back to 128 and we go back to the upside, well, we're gonna have all this junk in the way. I hope that makes sense. We have a lot of junk if the pair pulls back to 128. It's got a lot of work to do at that point.
Yeah, I'm having a little bit of an issue trying to get my platform up, but I think personally, if we find ourselves down at 128, that would be a bit of a damage to the uptrend. For me, it seems that the correction that we've seen is perhaps more kind of time based than price based, and maybe we've already seen the corrective low a day or two back. So I think once we start cracking through the high of yesterday, then I think we make new highs on this thing. Hey Sam.
Hey Sam.
I don't know what happened. My Wi-Fi just cut off. I had to unplug it again and restart it, but we're back again. So, first time that's happened, but it's all good. Yeah, did I miss anything?
No, we're just talking about one of the viewers asked if a pullback on the pound USD to 128 would be healthy for it to continue rising. Howard and I pretty much had the same stance on it. It would truly damage the uptrend it's in. I mean, it's going to have a lot of work to do if it wants to continue back up. I said, if it does pull back, I want to see clear separation and a smooth chart, minimum of 100 pips back to the upside, to this high over here, to be even considering it. If it doesn't have a minimum of 100 pips, for this pair, if this was a pound Aussie, I'd want minimum of 200 pips because it's a higher volatile one. But I need significant pip potential. I need a smoother chart because this is obviously consolidation zone, and I need a clear breakout. It's got to be clear. It can't be an extreme volatility spike to the downside and then it comes right back up to here. It doesn't really do much for us for stability purposes.
Yeah.
Can I just show my screen to just give you a bit of an idea on what I've got there? Okay, 1 second. Okay, so hopefully that should come through. Okay, yeah. So for me, I was looking for the thing when we failed up above that 130 to come back into that. We got basically two support levels: the lower one 128.61, and the higher one 129.10, 11 or so. And it looks like we've kind of based in there 2 days ago. Yesterday had an attempt at rallying but snapped back, and today we've actually kind of we've retraced most of the upper shadow from yesterday. So I would say most likely that we've seen the corrective low already. And that we don't come back down to 128, the low 128s. And I say, I think if we really started cracking through this line, the bottom line, I'd be a bit more concerned about the health of the uptrend. But I think this is really kind of just a sideways correction, a bit like this one here, where it got a little bit carried away, struggled a bit, and then we saw a nice 2-day correction back down to the previous support level. There, and then that's when the buyers step back in again. So I think we've done a similar kind of thing here where we've had the correction. It's gone sideways for a couple of days, and now we're starting to Maybe tomorrow we get the break. I don't know. Quite possible. I think we've got some news tomorrow. But technically, it looks like it's for me. I think it's made its correction. It's finished, and that we're about to resume the uptrend.
Yeah, yeah. Tomorrow would be a big day for the pound. So news-wise, definitely. Let me have a look. Yeah, pretty much what we said yesterday. I think, Howard, in the session with the pound, I was still looking more likely we're going to be bullish on it for a bit. That area of support that I had drawn out yesterday, that seemed to hold really well, and we've pushed up now. But whether we'll continue going up, I mean, it looks like, from my eyes, it looks like we're in a bit of a range at the moment, a bit of a longer term range. I say longer term, but I mean like a price range, sorry, quite a big price range. Of around, I know I'm in the futures chart, so the numbers are different, but never mind. Yeah, in terms, what was the original question? Sorry, would a pullback to 128 be healthy for pound to continue rising? Right,
down, down here.
Where is? Oh, okay. All right, I see. Yeah, I mean, we could have already had the pullback. This is the thing. If I share my chart real quick on my screen, even, I can explain what I'm seeing. All right, and then pop up trading view. Can you guys see the screen?
Not yet.
Not yet.
Oh, give it a second. Oh, there we go. All right, perfect. Yeah, so like yesterday, like I said, this boxed area, this huge area, this yellow box here, I'll be very surprised if we break through it. But it could go anywhere within here really, and then push up. We've kind of only really dipped into it in the last few days. So Friday, yesterday, today, we've only kind of dipped in and rejected, dipped in, but we're not also really pushing up much either. So we are really just in this kind of big range area. In terms of a bigger pullback, I mean, I can see it happening. Absolutely. I can definitely see, like a bigger pullback and then finally. But I mean, that would make that to me would make actually quite a bit of sense. Definitely, it could also be a bit of a trap, trap any breakout traders who, once we break this low here, they might be, start selling, and then especially, when we're in a ranging market, false breakouts can occur quite easily. So I can definitely see something like that happening, but it's very hard to predict. But yeah, even if we break these lows, I will still be more bullish until we get genuinely below this whole area. Once we get below, once I see structure more come in like that, then I will have a bearish sentiment on the pound for the longer term. But until that happens, this area I feel like is going to hold quite well. But we are again, I mean, this has been a long range that we haven't actually pushed up that much either. And if it's not that area, then I can definitely see this gap in volume being filled at some point. If I go on a higher time frame, it's very hard to predict. I hate using the word predict, but it's very hard. Yeah, that was it. Yeah, no. I'm still very adamant. I'm still very looking at volume. I'm still very adamant. We're not going to break this area. We're going to actually eventually get to that area. Then we're going to have more of a push down again. Those are the two main areas I have on the chart. We've broken through it. We're coming back. We're trying to get, absolutely. Yeah. Sorry. That's what I think. I'm pretty adamant. I mean, I could be wrong, obviously, but I'm pretty adamant we're not going below this area. And if we are dipping below these lows that we've had recently, it will be a fake out. it will be there just to trap traders, get them all to sell, and then we're going to start pushing up. So until I would have alerts set around these lows. I would want to see that kind of trap setup occur, and then I would scale down onto the 15 or 5 minute footprint, and then once we're there, I will look at the actual transactions coming through, and I will look for heavy selling or a huge amount of sellers being trapped, everyone trading the breakout, getting trapped, and then because we didn't really have much today. What happened when we went down to that area earlier today? Let's actually go. Were there any? What did we see on the footprint? This is still quite early in the morning. Yeah, we didn't really see many people. We didn't really see people get trapped or anything. No one was really selling. We just had a bit of heavier buying coming in as we started again here. Bit of heavier buying, some institutional activity. Again, another 255 contracts there. But yeah, we didn't really have any heavy selling. So no one was really shorting it as we were getting to these lows, which kind of makes sense. Who would really actually want to short it until we actually break one of the previous lows? That's when you're going to see all the shorts come in. And that is when I feel they're going to be taken advantage of, and the market will swiftly push up. That's and you just see buyers coming in, 530 contracts, 399, 255. We just saw good amount of buyers coming in. People are trading it like a ranging market, which it pretty much is. So nothing out of the ordinary. I would say it's in a range until we see a breakout occur, and then the move will come. That would be my hypothesis. So
Nice.
not much has changed really from yesterday.
I like the idea of if it closes today pretty much where it is, then you've retraced most of yesterday's upper shadow. So you can imagine people coming in, looking at that at the end of yesterday, thinking, "Oh, it's rejected, it's bearish, it's going down," and then they come in and think, "Well, if I'd have sold it anywhere near yesterday's close or today's open, I'd be underwater." So it could be one of those things where a lot of people get trapped based upon yesterday's daily candlestick, which looked bearish at the close.
Absolutely.
So that'd be interesting to see what the kind of the early action is tomorrow.
Yeah, I mean tomorrow it really depends because of the news. It is because there's no specific time for it as well. Do you know what I mean? There's no actual exact release time. So I personally just would stay away. I mean, yeah, it would be too much of a gamble to trade high impact news without knowing which, exactly what time it's coming out. When it's could come out at any point. I mean, it's a bit worrying. And yeah, who knows? So I would personally stay away from the pound tomorrow. We've got a few more comments came in. How does volume impact market movement? Oh, good question. Very good question. Volume can impact the market in many ways. Actually, I could probably show you. Why not actually show it? So let me go on a 4-hour chart. I can show you like longer term volume. So volume, generally speaking, when it's like high volume, so this is like the point of control, right? This is the heaviest traded volume of that whole leg down, right? And it was around here. Now that doesn't mean that like one side is more powerful than the other or anything like that. It just means that's where most transactions took place, right? And as you can see where it is, the market went pretty sideways for most of it. And that's generally what you would expect during times of consolidation. You're going to get heavier volume because the market's in that place for a longer period of time. You've got a lot more buying and selling happening within a confined area. So when you get back to that area, like we did here, expect it to go a bit sideways, right? As buyers and sellers start battling it out again, basically. Where you see markets react is during lower volume, right? It's kind of on the theory that no one really wants to transact that lower volume. So the market kind of just either gaps through it or kind of rejects very quickly. So I like to look at lower volume areas as essentially support and resistance, right? And that's where I got these areas from. These are just lower volume areas, right? And the market just reacts to them. Now, it could either gap straight through or it can reject very quickly. But generally speaking, you're going to see a reaction in the lower volume areas. So volume is a very good tool, especially something like the volume profile. It just gives you areas where you know, like the trade I took earlier today. I mean, I got out simply because we were at the point of control. We were at a very heavy traded volume area. I could see that the market was not wanting to push down anymore. So I just exited my trade, right? Like, if I didn't have that volume, I would never have known that I'm at the most heaviest traded volume area, and I'm going to expect a bit of choppiness in that area, or potentially a retracement, or a kind of accumulation, a sideways market. So volume can tell you so much information, but you have to use it in a logical way, right? Like, don't just assume, for example, like heavy volume means, oh, that's loads of buyers, or oh, loads of sellers. It's loads of both. It just means it's a big battleground, right? So expect the battle when you're in that area. And that's coming back to what I think it was the same person who asked a question about the ranging market, about changing your strategy. You can use volume to kind of, again, I hate to use the word predict, but kind of anticipate where we might start ranging, right? So if we're entering like an area of heavy volume, there's a good chance the market's going to start ranging for a bit. Now, it might not range for days or anything like that, but it will probably move sideways or be a bit of chop for a little while before it continues to whichever direction it wants to go, right? So you can kind of, I guess, adjust your strategy more if you're using, like Howard said, more for, like an RSI or a stochastics or something like that, where you're looking at overbought, oversold. You can definitely tie volume in with that, right? So you can mark out heavy volume areas. Now, this is a really long-term area, but even if you just do like the daily volume sessions, right? So if I zoom in to like and drop it down to a lower time frame, just as an example, once it loads, my internet's been terrible today, really, really bad. But like, you can look at like where, so this was the heaviest volume traded area yesterday. So when we're at that area on the new day, which we pretty much opened at, you can kind of predict that we're just going to go sideways for a bit, right? So you could use something like an RSI as long as we're at those kind of point of controls, the heavy volume areas, and you can kind of do, overbought, oversold, and kind of until it breaks out and continues somewhere, right? And you can use that kind of, you can use volume with something like an oscillator in order to kind of anticipate where the stochastics or RSI is going to perform really well. So here's a great example, right? Here's a perfect example. So we had the heaviest volume on that day was up here, right? So if I draw that line out of that, then 2 days later, we kind of entered that area again, and we just ranged for 7 hours or so, right? We just had a bit of a ranging market for 5, 6, 7 hours, right? So you could have used an RSI here, for example, right? And it would have worked quite nicely, like a stochastics here, because you're literally going sideways, right? So you could have sold at the top, bought at the bottom, made a bit of money. So you can adjust your strategy using volume as well to know where the areas where you're more likely going to be trending and where you're more likely to be going sideways, just based on volume of previous times.
Yeah.
And yeah, I think that pretty much.
Yeah,
pretty much what to say about it.
Speaking of volume and potential moves that are coming up. I wanted to go over crypto and gold potentially too. So I'll start off with crypto.
Please, that would be amazing.
Let me come into share my screen. Okay, so I have Bitcoin US dollar, Ethereum US dollar, and XRP against the US dollar. All of these pairs, if I go onto the weekly time frame, well, Bitcoin is currently consolidating on the weekly time frame. Ethereum is still in its downtrend. Seemed like it's lost some of its juice going to the downside, and XRP just completely sideways as well. If I go into Bitcoin, I think Bitcoin could potentially be starting a new trend to the upside. The trend indicators have pinched off. It made this humongous move downwards, and it started consolidating. And now we have, our trend indicators have crossed to the upside. So if I'm ever going to enter a trend or trade on Bitcoin, I really want to make sure I have the entire crypto market on my side. And for me, what I do is I go back to the heat map, and instead of the Forex heat map, it's a crypto heat map.
Okay,
So
nice.
I think it's up on the screen.
Oh, let me add it. There we go.
There you go. Right. So what I'm seeing here is the most traded cryptos, right? We got Bitcoin, Ethereum, and XRP. These are against all the currency pairs. Now, this again just goes back to that basic fundamental analysis, or not fundamental, but the basics of what I like to do is strength versus weakness. What is Bitcoin doing against everything else? And then what is the cross currency doing against everything else? The Bitcoin is not just Bitcoin, it's Bitcoin against the US dollar. So we have no US dollar support, but currently we have the entire crypto market support. As you can see, everything is green, meaning everything is going up. So cryptos could potentially be starting a new move, a new D1 upcycle. And we have a fresh cross on the daily. The 4 hour looks to be consolidating. So I think an entry point for me would be, or what I would start to monitor this pair would be around 88,800, 19 somewhere around there. And again, once you have a potential trading plan in place, if that price alert was to hit, I have to make sure I have momentum on my side. And with crypto, it's very interesting. Not all your trades have to be taken in the main trading session. Crypto's very volatile, and I've personally taken moves that have happened, in the Asian session, where Tokyo session. It's a very volatile instrument, but you have to make sure you use the smaller time frames, M5, M15, M30, whichever is giving you the best picture, and then make sure you have the entire crypto market on your back. You don't just want Bitcoin on backing you up. You want the entire market to be green. So then you have money backing you, and you enter into trade, and then you manage your position after you get into strong positive pips. If you don't get into positive pips immediately, well, you got to exit. You got to get into positive pips immediately, or you can use this Bitcoin heat map. If you have a very strong move to the downside, you can also look at it as an opportunity to invest into Bitcoin. I know we're always stuck on trading, but sometimes you can invest into it. You can use the major pullbacks in the market as a way to um, buy into it for the long term. And you can certainly use the Bitcoin heat map for that as well. But I think if you have larger moves to the downside, just wait for them to start consolidating, wait for them to pull back up, wait for them to start moving back to the upside, and have the entire crypto heat map backing you. And you just got yourself into a good long-term position with that. And you can do the same thing with Ethereum and XRP as well. Ethereum moved to the downside, and it's currently in a very strong downtrend. I would want to see this pair. It looks very similar to crypto, or sorry, to Bitcoin on the daily time frame. So I just want to get the entire market to back me, and I'm going to look at the smaller time frames. I'm going to look at
Yeah.
immediate momentum. If I get into a position, I want it to go into profit immediately. And if I'm looking for an investment opportunity, well, man, I can hold this, for a long time. It just depends on what you're trying to do with it.
Can I
yeah.
ask, because I genuinely don't know much about crypto.
Yep.
Rarely ever traded it. I'm quite a beginner with crypto. Let's put it that way. But in terms of like the heat map, I'm not too sure. But do other coins just follow what Bitcoin does, or because that was my understanding usually? Like,
Kind of,
if
yeah.
Bitcoin goes up, everything else goes up, and then it's kind of like the main,
benchmark.
yeah, benchmark. That's a great word.
Yeah, I would say it's kind of like the bellwether for everything. It's the monster in the room. Everything kind of just follows. I mean, I'm sure you've seen the recent moves with it when crypto was going to all-time highs. Every other crypto and coin was going following it, and when crypto took a dip, the whole market just crashed. Obviously there were other factors involved in it too, but Bitcoin really is the major uh, all-encompassing type of uh, insight to the entire crypto market. You can
Yeah.
if Bitcoin's going up, you can kind of bet that the rest of the coins will move up with it. But you just got to make sure um, the entire market is actually going up. Obviously
Yeah.
Bitcoin can go up and the rest of the market's doing nothing. Well,
Right.
make sure you have the entire market backing you. It's not just Bitcoin. Obviously, you can use Bitcoin, but the entire market is way better than just one, than
So,
just Bitcoin itself.
so especially if you're trading like other coins like Ethereum or XRP or whatever it might be, anything but Bitcoin. If Bitcoin is not giving you that confluence that, hey, like say you want to buy a different coin, if Bitcoin is not lining up, also going up, like for you that would be like an absolute no. But then like you have to wait for Bitcoin as well to kind of line up with that.
Yeah. So I mean, with all these, with the three cryptos here, Bitcoin, Ethereum, and XRP, if I'm looking to enter in on a trade on on Ethereum, sorry, if I'm looking to buy Ethereum, I'd want to make sure all three of these are green, all three of these sections. So the
Right.
Bitcoin section is green, Ethereum section is green, XRP section is green. That tells me the entire crypto market as a whole is moving up. It's doing good now. So if I just had confirmation of Bitcoin and Ethereum was kind of mixed, there was some green, some red, it just was doing something weird, I wouldn't enter into that trade. I want to make sure I have everything green. And um, you know,
Yeah. I got
It's,
you. I
it's,
got you.
it's a bit like Dow theory, isn't it? With the averages confirming.
I'm not too familiar with that, so I don't know.
Yeah, it's just the original theory was he was looking at the Dow Jones Industrials, but also the transportations had to confirm the move, and if it didn't confirm the move, then it was supposed to be a weak move, and you couldn't trust it. So it might be a similar kind of idea here.
Yeah, I mean, if we're taking exactly what you just said right there, I think that implies to the Forex heat map as well. You want to make sure you have money backing you. I mean,
Yeah.
um, what is the market doing? Follow it. Don't.
Awesome.
Yeah.
Really cool.
And then, yeah.
I think you have a comment. He asks, I don't know if you can see it on your screen, if you can. Jahangir, I'm sorry if I mispronounced your name, said, Nandi, since crypto complete volume is not available on a specific brokerage firm, we can get access to a complete volume of crypto, or basically if there is a specific platform where we can access it. Right, I think I know what he means. Yeah.
I'm gonna try my best to answer the question. So, my volume is this. It's the heat map. The heat map tells me how much the market has moved, what's going on in the market, and this tool alongside the Forex heat map. It's a tool available at forexearlywarning.com. You can go ahead and check them out. Great people. The same with the spreadsheet analysis that I did earlier. That same spreadsheet was also available from Forex Early Warning as well. So you can go ahead and check them out. But yeah, I mean, it's a very simple concept: strength versus weakness, and make sure you have momentum backing you at the point of entry. And pair that with all the
Yeah.
other things. Like for example, let's go into gold really quickly. So I think that was for crypto, I think just to brush up on it again, I think cryptos can be starting to move to the upside. We certainly have a fresh D1 cross on Bitcoin US dollar, and currently right now we have market backing the move. So I'd be very interested in looking for a position for long position. I'd be monitoring the market for a long. You got to manage your positions accordingly, but
Yeah.
it would make sense to go long rather than shorting it. That's just in my opinion, though. But
Yeah, I'm with you there. I'm with you there. I think the so-called risk-on markets are starting to move up, like stock market and cryptos. So it seems to be that kind of thing where we've had a big sell-off and now it's starting to, sort of come back slowly at the moment.
Right. Yeah, the entire market is it's pretty garbage. I mean, even if I go into gold, if I go into gold and I'm looking at XAU USD, gold is in a very strong uptrend on the weekly time frame. We had this really strong move up. It consolidated, and we're currently, we broke through that about 2 weeks ago, and now looking at the daily time frame, we're completely sideways. We're going completely sideways, and this 4-hour chart again, it's very choppy, and it doesn't help that the entire foreign exchange market is also choppy as well.
Yeah.
Because it's against, it's XAU against the US dollar. There's nothing, the US dollar isn't driving any movements, and, XAU itself isn't driving any movement. So if I was interested in trading this pair, if I wanted to look into trading gold, I would want to have it move all the way up to 3,057 around there, break the relative high and continue upwards from a breakout. And you again use the Forex heat map. It has gold on there as well, to confirm your trade entry. Here we go. We have all the XAU pairs against all the currency pairs. So
Mhm.
whichever currency pair is moving the best, if the US dollar is going really weak and XAU is strong, we have US dollar weakness here, and then we see XAU strength here, then XAUSD will have the highest percentage because it's moving the best because it has the best strength and weakness combination
Sure.
at that point of entry. But if I was to get into a long position on gold, I would certainly be, even though we would be trading off of a consolidation, we have no historical resistance after that high over here, right? So I'd certainly be willing to hold the position, but I would also definitely scale out. If I get into a position on gold and if there's a 1% move, I've banked a 1% move, 300 pips, which for gold is, I think it's pretty low, to get 300 pips in a single move. If you get 300 pips in a move, you can certainly cash out on half of it, or 70% of it, and leave the rest to ride and just hold it for long term. Since we have no historical resistance, it gets a little bit tricky on, where do you want your targets to be? What is your appetite, your risk appetite, and all that stuff. But we are in a long term uptrend, so I only assume that this is just a short term consolidation. I'm going to be personally waiting for this guy to move back to the upside, and when it does break, or if it does break, I want confirmation from that heat map, and I'm staying in and scaling out lots. Uh, Most likely after the intraday momentum, but again, I'd have to analyze the market. If XAU is still showing strength and US dollar is still showing weakness, I'm not getting out or scaling out. I'm still staying into it. Full position size. Just when the drivers change, that's when I change my position.
Yeah. We got another crypto related question, I believe, for you, Nandi, as well. Jahangir again asks, if the whole crypto market is going around Bitcoin, then don't you think it can bring the question that other coins are not independent and move independently?
Well, I would say if I'm going to enter into a trade on Bitcoin or any Ethereum or XRP. Those are the ones that I trade. If I'm going to enter into a trade on any one of those guys, I want to make sure the entire those 3 sections I showed you on that heat map are going green. Those are the major cryptos. Any of those little independent coins, I mean, obviously they can do their own moves and have their own volatile moves, but for the best scenarios, I just want the entire market backing me on the entry. And if I'm looking to invest in a long-term position, I can certainly wait for a strong pullback, whether it's a downtrend or it's an uptrend pullback, and enter in based on what the charts are telling me. Right now, for this exact moment in time, the charts are telling me that crypto could potentially be setting up for a move to the upside. And as of right now, yeah, the market has confirmed it, but I mean, that's up to you. How much you're going to risk and everything like that. So that's kind of how I'm going to answer that question. I don't really trade other independent coins. So if I'm going to enter a trade on crypto, I want the entire market backing me, and I want chart support with that. I want everything moving with me.
Yeah. Awesome. Got a nice comment from Andre. He goes, "Congratulations on the channel. It's very good for guiding decisions." You're most welcome, Andre, and thank you for the compliment to the Ola Prime team. I'll be passing on your compliments to everyone. I'm sure they'll be very happy to see that. But yeah, that's what we try and do. We try and make, try and help out, I guess. Try and educate.
Yeah.
And, yeah.
It kind of sucks, when you have a market condition like this, there's really not much we can tell you guys, You just have to be patient. You have to wait until things start to clear up a bit. We can only tell you so much. Can only predict, quote unquote, so much. But we're not in this game to predict. We're here to tell you what the market's showing us right now. And there's not a lot to tell you guys.
But that's part of the reality. Sorry,
yeah, it's
Howard,
one of those old famous market expressions: when the markets rest, do the same.
Yeah.
But that's part of the reality of being a trader, right? Not every day is going to be a great trend, and you're catching, ridiculous amounts of pips and all that. There's going to be times where it is a bit boring.
Yeah.
But you got to learn not to just jump into a trade for no reason. Then, when it is a bit boring, just like Howard said, do nothing, rest, sit on your hands. If you're not seeing anything, walk away. Do something else, or whatever it might be.
Right. And if you really got to get that trade in, just scale back on that position size. That's a money saving tip right there. That will really make or break your trading account. If you are not scaling back in times, when the market is choppy or not trending, for me, if I don't scale back, oh my God, I'll feel it very quickly. I can guarantee that.
Absolutely. Yeah, definitely. Risk management is always going to be probably one of the top three. Well, I would say more than top three. Risk management is probably the most important thing in trading.
Yeah, so safety first.
Yeah, absolutely. Well, we have just under 2 minutes until this live stream ends. So if anyone has any other comments or questions, try and quickly get them into that comment section so we can read them and answer them in time. Otherwise, that will be the end of the session. I think it was pretty good. I was really interested. I really like the whole heat map thing, the way you analyze it. It's completely different to what I'm used to, at least.
Yeah.
So it's awesome to see a different perspective of essentially analyzing the market, right?
Yeah. Right.
Really cool stuff.
I'll hope in the next session I can pull up one of my own personal trades and I can show you guys, what the heat map was showing at the time of entry, what the conditions were like, and show you guys a more in-person event that happened.
That'd be amazing.
Right, that'd be really helpful.
That's good.
Yeah, don't be afraid to record your screen. If you're not in the live session and you're seeing something, just screen record and then you can show it in the live session, because that's what I have to do most of the time, because I'm doing the third session most days now. Most of my trades happen in like the US Open, so I have to kind of just got to record the screen. There's nothing I can do.
Yeah, no, I hear you.
Awesome. Well, guys, that is yeah, that is time for this live session. Howard, Nandi, it's been an absolute pleasure.
Pleasure, guys.
Thank you.
And thank you, guys. And to everyone watching as well, thank you for all the comments. And yeah, it's been awesome. So join us again tomorrow, same time as usual. We'll be back with more live trading. So thank you, everyone. Guys, take care. Have a good evening.
Bye.
Bye-bye.